today. Hopefully, we'll sail from now till about 2 p.m. And please, with an open mind, let's get started. What are your expectations from today? Just maybe a few reactions, 2, 3. What are your expectations? I'll come to this table first. Anyone here? What are your expectations, ma'am? Ma'am? What are your expectations?
Assalamu alaikum. My expectation is on Islamic finance structure.
Good morning. Yes, I just come to learn and deepen knowledge.
Good morning. I'm here to know much about investments. Then that's all.
For my own, just to know more about Islamic finance opportunities, others opportunities.
All right, thank you so much. We have an online community, so for those of you here, please feel free to invite your friends and family members, business colleagues to join us. They're joining via Zoom. For our online community, you're welcome to this first beautiful collaboration in the Islamic finance space, and we do pray that as our other attendees here are saying, they want to deepen their knowledge and also seek more information in this space, and we'll try to achieve that. We'll take a keynote address. Our speaker is on her way, and obviously we have panel sessions in the course of the day, and that should take us till afternoon, when we'll then interact with everyone, take your questions and answers, inshallah. Without further ado, I'd like to invite our host to give a welcome address. Dr. Bashir Oshodi will give us a welcome address, and after that, I'll take a few reactions from you as we wait for our keynote speaker. Dr. Bashir.
Okay, good morning, everyone. On a very light note, when I did my first degree, at the end of the day, we had the yearbook, right? 1998. At the end of that yearbook, I was thinking to myself, what was it not that were the ones that initiated Facebook, right? Why did we not do Facebook? We spent so much time doing a lovely yearbook, lovely colors, put our hobbies there, our likes. We didn't do the yearbook, or we didn't do the Facebook. Now, Facebook emerged much, much later, but not from us. We did real estate securitization, tokenization, right? Way back. But we didn't take it any further, right? Today, people are talking about tokenizing everything. Tokenize projects, commodities, and all sorts. How are we going to go about that? That's the future. Today, tech companies are the largest in the world. Top 10 companies in the world are tech companies, right? The banks, the airlines are behind, right? So I started to think to myself, what are we going to do differently? Are we going to continue with the same model of structuring Sukuk? Lovely structures. We get Sharia board to approve, not a problem at all. But how do we get retail clients to invest in it online, quickly, digitally, without problems, and get it filled up within a few hours? Just like the US election, right? They have the US election. They have the election, you can see the score sheets, and all of that. Why have we not done that? And those are the concerns. crowdfunding platform to get license and to get crowd and to acquire 10,000 clients, 20,000 clients. It doesn't take them at all. But it has taken us so much time. Being in banking, it takes so long to open an account and to get clients on the table. What are we going to do differently? And that's the purpose of this session. Now, how do we collaborate? Do we acquire? Do we partner? Do we take equity position? Are we going to take it right now, today? Or are we going to process documents for another 3 months, right? Under Islamic finance, right, there are cases where you can take equity position under Mudaraba Musharaka, right? You can actually take equity position. Now, from the banking position, there are limitations from IFSB standard because you have to make certain reservation on your capital. But the kind of capital we're talking about is not even so much. When Facebook started, they got the first $400,000. That was the first investment in Facebook, just $500,000. On the back of $500,000, they expanded so aggressively, right? Look at Airbnb. Airbnb, there was a conference, you know, there were no spaces. And then some guy just said, hey, let's pump in some beds. And that became Airbnb. Why do you have to own hotels or shortlets? Why do you have to own the buildings and invest so much money in it just to make little profits, right? Why do we have to own so much assets on our books, right? We have the Wakala model that we can tweak as we like. It's the most flexible of Sharia compliant contracts. On the asset side, on the liability side, and if you like, you know, it can just be a service. How do we tweak that contract so dramatically? You know, again, all the regulators see, they just see fees on our books. It's not going to come under liabilities, even in the banks. You know, it's not even going to come under investment. So even the central bank will not, you know, the regulators will not see that is liability that is subjected to, you know, subjected to, say, what they call it, DMO, of course, not DMO now, subjected to NDIC premium and AMCON charges, right? These structures can be created within a few days, but we don't have the platform. And when we have the platform, we don't have a team on ground that can ignite, make use of that platform in the most dramatic fashion. And that is the problem, right? So what are we going to do differently? Today, do we set up a fund? I mean, before then, the bulk of foreign direct investment in Nigeria in the last 2 years are fintech related. In fact, it's a lot easier for crowdfunding platform and fintechs to get foreign direct investment than commercial banks and fund management companies, right? It doesn't matter where they say we're going to have the head office in New York or in London. It doesn't matter, right? As long as operationally you're able to survive and survive well and effectively, right? So again, our competitors are no longer the banks. Those we think are our competitors. Our competitors are the telcos, the fintechs, the crowdfunding platforms. How do we then merge if we cannot acquire? How do we take equity position? There could be call or put option, and it can be perpetual. When do we do this? Thank you.
Thank you very much, Dr. Bashir. For those of you just joining us, you're welcome. Listen to Dr. Bashir Oshodi. A little bit of background. Who is Dr. Bashir? He has over 23 years of work experience in banking, real estate, and academia. He's the chief executive of TrustArthur, a fund management company, principal of a UK Sharia compliant real estate fund. He was the group head of non-interest banking at Sterling Bank, and he set up the non-interest banking window in 2013. Dr. Bashir Oshodi has also set forth the alternative bank proposition. He was a member of the non-interest finance working group sponsored by EFINA. We'll get to know more about EFINA in a few minutes. He was also a member of the SEC Alternative Finance Market Master Plan Committee. If I go on to read the rest of his profile, that'll be the rest of our breakfast. So I'll just move on to our next agenda. We're going to listen to a keynote address Our keynote speaker, Dr. Mrs. Agnes Olatokunbo Martins. She's the chairperson of EFINA. Unfortunately, she's not able to join us in flesh and blood, so she has sent us a representative to be with us today, and she is here. Let me tell you about EFINA if you've never heard about them. I mean, you did hear me mention it when I read out Dr. Bashir Oshoda's profile. EFINA, Enhancing Financial Innovation and Access. That's what EFINA means. It's a financial sector deepening FSD organization that promotes inclusive finance in Nigeria. The FSD network is a family of 9 financial sector deepening, or FSD if you would like to call it. They run programs operating across Africa. EFINA was established with support from the UK's Foreign Commonwealth and Development Office FCDO in 2007, and they began receiving funding support from the Bill and Melinda Gates Foundation in 2009. To work with us today, representing the keynote speaker, Dr. Mrs. Agnes, is Ms. Oluwatomi Eromosele. She's a development economist with over a decade of research and consulting experience in economic development, financial inclusion, and employment creation. As the GM at EFINA, her research currently centers on generating credible market information needed to promote access to finance for all. Since 2018, she has also led EFINA's Access to Financial Services in Nigeria survey, which has become the reference point for financial inclusion data in Nigeria. More recently, her work has extended to demonstrating more linkages between financial inclusion and achieving the Sustainable Development Goals, with more focus on financial health, agricultural financing, and women's economic empowerment. She's supporting the development of a financial system that delivers real value to the economy and improves livelihoods. She holds a doctorate degree from the University of Leeds in UK. Ms. Eromosele will speak to us now, delivering the keynote address. If you'd like to use the convenience, out this door, behind the registration point, you'll find a set of convenience there. However, if you'd like to have more privacy, feel free to go back to the reception. Further down the corridor, you'll see a set of stairs descending. It takes you to a wider rooms for your convenience. I'd like to invite Ms. Oluwatomi Eromosele to the stage. Okay, she'll join us in a few minutes. Before then, when we listen to Dr. Bashir, I'd like to come and take reactions from, can somebody help me? Take reactions from you. When Dr. Bashir spoke with us, I'm sure that's probably set your mind rolling in different directions. So again, I'd like to ask you, what would you like to take away from today's event? What kind of conversations are you expecting to happen here when we bring on the panelists? Anybody? You can come forward so the online community can also see your faces. Who would like to? I can start calling names, so. You know me. JJ, come and collect this mic while we wait for Ms. Eromosele to come on stage. Would anyone like to share their... Oh, we have her here now. I think it's right to give her a few minutes to settle down. So I would insist, please hand the mic to Brother Abdul Rashid to tell us what what he's expecting from this session.
Thank you very much. So I listened to Dr. Bashir Oshodi. I've also been following Islamic finance since 2000. And so I feel there are a few gaps. One of them is that how do we communicate value to the customer? There's a language problem. Our verbiage is not leading to any call to action. It makes them more confused. How do we consider co-creation? Most of the people in Islamic finance are migrants from conventional. And I know that they need, from what I've seen, they need some time to unlearn unlearn
what they're coming with and
yeah,
relearn
yeah,
what's
and
happening in
yes,
our
so-
space. Thank
yeah,
you so much.
So co-creation is another thing. Then paying attention to the KPIs. So for example, if you are talking of microfinance, once the non-performing loan starts going, if the numbers are high, you know that your credit risk, the way you manage your credit risks, the eligibility requirements have issues. Micro insurance, once the renewal rate is very, very low, it means there's no value in the product. So we also need to look at that.
Okay, inshallah.
Thank you.
Jazakumullah khairan. Ms. Eromosele, please join me on stage as you give us your keynote address. Thank you so much.
Good morning, everyone. Good morning, everyone.
Good morning.
Thank you very much for inviting Efina. So I am Dr. Oluwatomi Eromosele. However, I am representing my board chair, Dr. Agnes Tokumbo Martins, who unfortunately cannot be here at this time. And so I will be reading her keynote address so I don't misrepresent her intention. I initially had some slides that I wanted to just show to make, make this a little bit more real and to put some numbers to this. But so try to interpret her slides in pictures, but we would make do with what we have. I would read straight from what she has asked me to share. Again, I'll say thank you very much for inviting Efina to this occasion. I know that far back as 2013, Efina had participated a lot in the non-interest banking, non-interest finance space. Maybe we have not been as visible and participatory as we should have been, but I think sometime earlier this year, we were part of the Takaful program, and we're trying to again engage and see where the ecosystem is at this point and see how we can support. So we're happy and excited to be here, and thank you and well done for the work that we've done so far. I think Mr. Rashid has said some of the things I need to say, but I will still go ahead and read them anyway. So it says, Nigeria, our country, home to over 200 million people, the largest population of youths in the world, and largest economy in Africa, with nearly 1.4 trillion in GDP. This country is without doubt a country rich in human, economic, and natural resources. Yet in the midst of these resources lies a wide range of deprivation. 133 million Nigerians are multidimensionally poor, and the country records major challenges in progress towards 13 out of the 17 Sustainable Development Goals. Globally, financial inclusion, defined as access to useful and affordable financial services, which is transactions, payments, savings, credit, insurance, and pension, that address their financial needs and is delivered in a responsible and sustainable way, has been identified as an enabler of 8 out of the 17 SDGs. Financial inclusion increases the ability of individuals and businesses to manage their financial lives, withstand shocks, maximize economic opportunities, and save for productive investment in things like education or health, which can improve the overall quality of their lives. Increase in the number of formally financially included people also generates local savings, which increases productive investment in local businesses, drives productivity and economic growth. Now, despite global consensus, achieving pervasive financial inclusion remains a global challenge. In 2021, 24% of adults globally did not have a formal account at a bank or other financial institution, or with a mobile money provider. In sub-Saharan Africa and in Nigeria, this number doubles, with 45% and 49% of adults financially excluded. Although significant progress has been recorded in the uptake of transactional accounts and payments, with weak financial and digital infrastructure, particularly in rural and northern Nigeria, mobile money and formal inclusion has not been able to scale access to financial services in underserved areas, despite the wide proliferation of mobile phone ownership. Beyond transactional accounts, the depth of financial inclusion of Nigerians, measured in part by the uptake of credit, insurance, pension, and investment, has been quite shameful for us as a country. Still, more than ever before, as Nigerians grapple with the effect of ongoing local shocks, including the removal of petroleum subsidy, rising inflation, climate shocks, insecurity, and rapid currency devaluation, financial inclusion remains essential for resilience and economic recovery. Just to say some of these data points I wanted to share, and I would share that with the team, was just to also then highlight the nuances with regards to financial inclusion in Nigeria, how we've seen payments really scale up, but then when you look at credit, insurance, pension, all of that are really, like she said, really shameful. We're still less than 3% for credit, around 2% for insurance, and this is 2021 data. We've made some progress in the last 2 years. But just to highlight the fact that we need to look beyond just transactional accounts to really deepen the extent of financial inclusion for Nigerians. We usually say, this said that 49% of adult Nigerians don't have formally excluded, so they don't have a transactional account. But then say 95% of Nigerians are financially excluded when we think about formal credit, formal insurance, so we need to extend beyond just access to usage, and then think about also the quality of financial services that we're offering, and also think about financial services that can actually impact the lives of Nigerians. So I'll go back to her notes. And that's where we think that this comes up. Because when we ask people the question of why are you not using insurance, why are you not using pension, there are a couple of things that they all, that points out challenges, which I do think that Islamic finance can help address. And a couple of them will be things like trust, or I don't believe in them, or I don't understand them. So they don't trust it because it's not delivered in a message that they are able to understand, and then affordability, and things like that. So this is where we think Islamic finance can help. So when we look at transactional accounts, okay, now I'll go beyond, okay. So Islamic finance operates based on Islamic law principles, prohibiting the collection of payment of interest and engaging in excessive uncertainty. And that's where the transparency bit comes in to help us. In Nigeria, where a significant portion of the population adheres to Islamic principles, Islamic finance can cater to individuals and businesses seeking Sharia-compliant financial products. This includes Islamic banking, Islamic microfinance, Islamic bonds, and takaful, but offering ethical and inclusive financial solutions. By offering ethical and inclusive financial solutions, Islamic finance can attract individuals who may otherwise be hesitant to use conventional banking services. Financial technology has revolutionized the accessibility of financial services globally. In Nigeria, fintech solutions have immense potential to bridge the gap in financial inclusion by leveraging innovative technology. Mobile money, digital payments, peer-to-peer lending platforms, and other fintech solutions can reach remote areas where traditional banking infrastructure is lacking. From our data, we're also very much aware that northern Nigeria is not just more deprived, but also when we look at financial inclusion and formal inclusion, it's like we have two separate countries. So, and then we have bulk of the people who already believe in what we're doing here today. The issue is then how do we communicate to them? So we do understand that economic exclusion is also a part of that, but once you look past that, there are still other barriers which we think Islamic finance can help us address. And in terms of how fintechs have done this, some of that would include convenience, transparency, faster resolution times, faster payments, accessibility, suitable services, targeted services, and low-cost services. All of these features are features that, like I mentioned earlier, are currently barriers to inclusion. So we've seen Islamic finance and fintech put together address a lot of the barriers that we see to financial inclusion in Nigeria today. So how do we move forward? Just 4 steps that we have. One, we have digital Islamic banking, which includes developing platforms that adhere to Islamic finance principles, providing services like mobile banking, payments and lending while ensuring Sharia compliance. And I would encourage us to look beyond banking, like I mentioned earlier on, to digital financial services, really, but then delivered through platforms that can ensure that we are able to deliver ethical and inclusive products. Sharia compliant financing through fintechs. We need to utilize fintechs to offer microfinance services, so that's Sharia compliant microfinance services that cater to small businesses and individuals in rural or underserved areas. Thirdly, we have fintech-enabled zakat distribution. We know that the government, for example, they've used digital DFS to drive the distribution of humanitarian transfers. And we know that within the Islamic community, there's a lot of that going on. And we do think that that's an opportunity for us to digitize this, this distribution or these givings. We also need to digitize and support informal groups and whatever informal collaborations and communities that we have within these communities. And lastly, it's around digital and financial capability for the excluded and the excluded segments that we've talked about. Again, pointing to the fact that Sharia actually insists, compliance insists that you are transparent. There is no ambiguity in your communication. There is no, the risk is minimized because you are encouraged to ensure that the users understand. And this is one thing that is really, really lacking in Nigeria. Awareness is really one of the biggest drivers of exclusion around the non-transactional account offerings. So promote financial literacy and awareness campaigns to educate the public, especially in rural areas, about the benefits and accessibility of Islamic finance and fintech services. Finally, products must be simple, they must be useful, they must be accessible, they must be valuable, right? And they must be efficient to use for the customer. In conclusion, expanding financial inclusion in Nigeria is a critical goal to ensure access to financial services for all segments of the population, especially the unbanked and underbanked. Islamic finance and fintech play a pivotal role in advancing financial inclusion in Nigeria. By synergizing Islamic finance principles with fintech innovations, Nigeria can make significant strides in expanding financial inclusion, catering to diverse segments of society, and contributing to overall economic development. Thank you very much.
Thank you, Dr. Masele. So, not to put pressure on any of you here, I don't know if you were listening to her intently, and I kept on hearing Islamic finance and fintech will do this. Islamic finance and fintech has done this. So the bulk of the work is in your hands, subhanAllah, and I pray that Allah makes it easy for you. And that will take us to our first panel session for this morning. For those of you just joining us, you're welcome to the breakfast session, the fintech breakfast session first of its kind collaboration in this Islamic finance space, hosted by TrustArthur and Lotus Capital. We plan to expand financial inclusion in Nigeria. As you've heard Dr. Amosele say, there's a lot of work for us to do, and so we're trying to look at the role of Islamic finance and FinTech. The first panel session, let me just go and take my seat, as I'll be moderating that session, inshallah. We'll be looking at bridging the gap in financial inclusion and Islamic finance approach. And my panelists, I'd like to invite Mr. Usman Okwonla. He's the co-founder, Capital Grow. Okwonla is a highly passionate professional with a strong background in finance, Islamic finance, and FinTech. His educational journey includes training in finance, Islamic finance, and FinTech from the prestigious University of Ilorin, Tekidia Institute, I beg your pardon, and Lagos Business School. Notably, he holds the title of Certified Islamic Finance Executive from the Ethical Institute of Islamic Finance in Dubai. Mr. Osman Okwonla, please join us here. Jazakumullah khairan. Please support him. Thank you. You can grab the mic. So we have just 2 mics and we'll try to manage. You can sit. Assalamu alaikum.
Wa alaikum assalam wa rahmatullah.
Right. Thank you. Wa alaikum salam. Joining us here, Ibrahim Lukman, who's the founder, chief product officer with Halal. Ibrahim Lukman is the CEO and product lead at Halal, a Sharia-compliant digital bank committed to interest-free banking and ethical financing. With a remarkable experience exceeding a decade, Ibrahim has meticulously crafted his expertise in digital product development, solidifying his standard as a revered FinTech authority. Mr. Ibrahim, please make your way here. He is motivated by a lifestyle deeply intertwined with the principles of Sharia. Ibrahim embarked on the visionary journey to establish a world where people can enjoy interest-free lifestyle. His commitment to upholding Islamic financial standards extends beyond the confines of his role, as he currently serves as a fellow at the prestigious Institute of Islamic Finance Professionals, IIFP, here in Nigeria. Last but not the least, panelists joining us here, Mr. Femi Olufemi Balogun. He is the co-founder, CEO, PayVantage Limited. Femi is an astute management professional with over 15 years of cross-functional experience and exposure across the consulting, banking, and telecom sectors. He has implemented, deployed, and advised policymakers on the use of technology-driven platforms and channels to deliver innovative and value-driven financial service offerings. You can see his profile is a whole textbook. Allow me stop here and let's get cracking on the wa alaikum salam wa barakatuh. Jazakumullah khair. Right, you're welcome. Let's start with Bros Remo. You don't say. I mean, we'll see almost everywhere, subhanAllah, in this Islamic finance space. Let me just go straight to him. Please pass the mic to Femi Balogun. In the early 2000s, financial inclusion became a key focus for policymakers, financial institutions, and organizations around the world. Share your brief initiatives for financial inclusion here in Nigeria.
Okay, Alhamdulillah Rabbil Alameen for this great occasion. I must commend Lotus Capital and TrustArthur, most importantly, our mother here, Madam Ajara Diola, same my sister, and Toyinki Kereokon, our brother, Dr. Bashir Bello.
Bashir Oshodi.
Bashir Oshodi, sorry. Okay, so basically, because this is great, it's the first of its kind, even in the financial industry, you know, seeing an event where we're having a FinTech breakfast session organized by financial institutions. To share my initiatives of what I've done in the industry, Alhamdulillah, I've been in the industry for over 15 years. Working with, when I was in banking, GT Bank, Access Bank, then Etisalat, now Nine Mobile, driving financial inclusion. And in this industry, we look at what are the pain points of the customer, what are the challenges that the customer are experiencing. In 2015, we look at financial inclusion in Nigeria. You know, we had statistics from FINA, and we look at how can we leverage technology to drive financial inclusion. Then in Etisalata, we partner with Guarantee Trust Bank to launch GT Easy Savers. It was a solution that from the comfort of your mobile phone, leveraging USSD, you can dial a USSD and you seamlessly open a bank account from the comfort of your mobile phone. Now, it wasn't smartphone. If you have got a future phone, you can dial the code and you open a bank account. And it was interesting because the product won Financial Inclusion Product of the Year 2015. However, not just winning the product, not just giving an award. The product was able to drive 500,000 accounts for Guarantee Trust Bank in 2015. So it was innovative, and it was a unique one because we believe that people have got mobile phone. They've got mobile phone, but they don't have access to financial services. Why can't we leverage the technology, partner with financial institution, and leverage on the data set of the telco then to drive financial inclusion? That was very remarkable, and it was a strategic partnership. However, because we created that solution as a platform, which is very important for the fintech and the financial institution today to note. It was a platform. Wema Savers also came on board. We partnered with Wema to also launch the same services because the goal is that let us create a platform. When you create a platform today, what we've seen, Uber is a platform, all other services is a platform. Platform rules the world. That is number one. Number two is that while we conducted the data set, we also observed that people have different compelling cases. Different customers have issues. They know they have a job to be done. So my job that I need to be done may be different from another customer job that needs to be done. We observe that, yes, we were able to drive mileage. People were opening accounts. But some people didn't open accounts because the compelling case for them is access to credit. They don't have access to microcredits. Banks are not willing to give out credits because they don't have credit history. What do we do? And we observed that Telco was sitting on a huge data set. As at then, I think we were processing maybe 3 terabytes of data daily. Because you know when you call, you are generating a lot of data sets. We partner with a company called Minds. It's a silicon-based company. And we said, okay, we've got this data set. Telco, we have this data set. Banks is not willing to give out credit because they don't know the credit history of that customer. Can you apply artificial intelligence, machine learning? They were able to use a model called neural networks. So they were able to model those data to determine the probability of default. So what does that mean? I have got data sets. Somebody in Maiduguri, for example, has got a series of data sets with the telco. The person needs access to micro-lending, microcredit. However, if he or she approaches the bank, they'll tell you that you don't have credit score. They cannot extend credit to you. However, you've got a data set with the telco. So we're able to mine those data. We mined those data, and the guys were able to create a model that they were able to use to offer quick cash. The service was called quick cash. So you dial the code, for example. Once you dial the code, and the code is still available today, star 561 anyways, after 5 years. So you dial the code, and the code passed your mobile number into the model. And the model was very robust, and that's the great thing that artificial intelligence can do. The model was able to analyze, okay, if I'm the type today, I called Dr. Bashir Oshodi, I called Tony Kekereekun. They were able to model that data by looking at who you call, who calls you, what is the credit history, what are they spending on the network. And we're able to derive a model out of it that the default trace was less than 1%. Because at the end of the day, they were able to get those data sets, determine your probability of default, and the default trace was less than 1%. We also make a call to those customers, and we observe that some of them are even getting credits to sell vegetable. You know, they were getting credit 10,000 naira in 14 days. It was quite huge because they were getting credit of 10,000 naira in 14 days. But because you know that they run a turnover business. So they buy, they get, and it was, I think it was like 14%. It was quite high. The interest rate was quite high, which I know that's not what we're discussing here today. But they were able to get credit for their businesses. Some of them, they don't have bank accounts then. But they have a need, microcredits. I don't have a bank account, but I need a wallet solution, which is more like, a bank account. I need a wallet solution for that credit to go in. So it was a compelling case for them to drive financial inclusion. So the journey has been that we're able to identify the customer pain points. And once we're able to identify the customer pain point, we leverage on technology to address that customer pain point, and we're able to deliver value. Those are some of the initiatives that I would like to share. Thank you.
Thank you so much, Mr. Femi. Please, let me come to you. Financial inclusion remains a major challenge in Nigeria, and I'm sure you heard that come through when Dr. Mosela was giving her keynote address. Millions of people remain outside the financial banking system, in spite of all the efforts so far. With higher income earners having access to a broader range of financial services, prefer workable solutions to achieving about 95% financial inclusion. And that's a tall order, 95%. I think we should just even target 50. Just prefer solutions so that people here can start to work on those solutions.
Yeah, okay. Thank you very much for this opportunity. And I'm very glad that I have this chance to speak. And I have my great leaders here, honestly, today. I always learn virtually from Dr. Oshodi very well on YouTube and other channels. So I have that. I'm very grateful for that opportunity to speak. So financial inclusion, and how do we achieve 95% of financial inclusion? It's a great work, and I think this is the beginning of that, actually, that the collaboration between the institution, Islamic financial institutions, bank and asset management company, even Kakafo companies, work with the fintech solutions. So I think that was the first stage, the first step to take. And I think the next stage is to find the pain point of the customer. So let's take from the credits now. I remember in 2018, when I attended an agent bankers association meetings, I think around Ikeja. And after that, I started getting a call from one of those people that attended that I should come and get a loan, like around 2 million naira, just a single digit interest. I was like, I can't. He kept calling me out. I told him I can't take this. So that is to tell you how more people need credit. But many of us are actually financially excluded because of the fact that we don't want to go into interest-based banking. So I think the most important part is actually the credit. And I have a number of SMEs that are looking for this. Because of that, they desire to stay where they are in their business. And I think that's the first. The Takaful as well. I was telling someone recently that
so let me take you back very quickly. We've identified the pain point. We are not able to access credit as Muslims because we will not deal in usury, right? Yeah. So what kind of solutions have you come up with, or is in the work that will satisfy such person that is seeking credit, an SME that needs credits without interest?
Okay. So that's what I'm trying to.
Okay.
So we actually.
I apologize for jumping in.
No problem.
I'm just excited to get those.
So we are actually trying to work on a solution that actually facilitates credits to SMEs, and then that will be based on moreover supply chain finance. Actually, that's what we are working on. We realize that merely giving money to SMEs might not be the best. That might lead to higher default rates. We have seen that in the past. In fact, I've had the case where an Islamic bank gives loan to an SMEs, and eventually he used that loan to pay debts somewhere else. So I think the best way to go about that we are actually working on is to do supply chain finance, and it has to be a niche, not general. So we can be focused on food supply chain, we can be focused on housing material supply chain, and so on and so forth. Okay. So that's the kind of solution we're actually working on currently.
Okay, let me come back to you very quickly if I come to you. So any solution in this space, because you also mentioned that credit issue. Do you have any solution immediately?
So number one is that solutions around this, right, has to be partnership between the fintech, the financial institutions, and maybe other players in the value chain. And if we say, if we're looking at this kind of solution, because we are payment enablers, so PayVantage is a payment enabler entity, and the strategy has to be that, okay, we need to go to the clusters because our service in Islamic finance is unique. I can't just give you cash. I need to know what you want to use that fund for. I'll give you an instance. Maybe 2 years ago, I was in grains markets in Kano because I was working with PSB then when we were trying to look at, we want to deploy, solutions. So I was in grains markets, and they control billions of naira in greens markets. So we need to, in developing propositions, credit that is tailored into our values. When I say our value, Islamic finance value, we can't just sit somewhere and say, okay, you can just access the service. I was in a market, they call it cow market in Kano, right? And I was with them, I sat with the leaders just to understand what are their pain points. So what's very important is that fintech must be an enabler, that's number one. We need to empower the fintech, and this is what is happening right here. Let fintech visit those clusters, because extending credits when it comes to financial services, Islamic financial services, has to be more like a cluster. I can't tell you that you want to buy a property, then you can access it via mobile phone. Yes, you should be able to access it via mobile phone, but it must be tailored to a cluster. So visiting different clusters, right, identifying their pain points, what do they need those credits for, right, and then we can partner with more like the merchants or the provider of those services, and then develop technology. So you need the services you can apply from your mobile phone. I'm sending the fund to the merchants that's going to deliver that services. Okay. However, that cluster is very important for us to be able to understand their needs, and then we can leverage technology to help them in addressing their pain points.
Okay, let me come to Malam Ibrahim very quickly. So there is this financial literacy gap in Islamic finance. Can you help highlight the existing challenges and opportunities and the tools of Islamic fintech solutions that we can employ to bridge this gap?
All right, thank you so much. Good morning, everyone. Okay, so the real facts are there, whereby when you even talk about Islamic finance in a gathering, or particularly with some people, even Muslims, they tend not to really understand the concept of it. And also there's a lot of misconceptions that, Islamic finance, based on the word Islam, is actually stereotyped to Muslims alone. And so, okay, so let me just give a typical example. I was having a conversation with a few of my friends who are VCs, and they were like, Ibrahim, I'm not going to put money in this because it sounds more Islamic. So what's the way forward? Every brand, has a reason why they exist. Okay. And also positioning, brand position is actually very important, which I can say there's a need to revamp the story of Islamic finance, so that it won't be stereotyped when you start saying it to people, and so much more people can easily relate with it. So it won't be, the best way it can go really far is when you're not telling the story as if it was just Islam, for Islam alone, but also for other people to be able to buy into it. So thank God, Efina, yeah. So I mean, she mentions few things that really inspired her. I even wanted to ask her, are you a Muslim or you're not a Muslim? Because I like to throw it to everybody. If you're not a Muslim, please, can you just raise your hand? So I have a few questions to ask. Okay. When you hear about Islamic finance, what's the first thing that comes to your mind?
I can take the mic to them.
Yes, please.
Yes.
The man in white, please.
Man in white, please come forward. So we can see you as well. We have virtual participants.
Good afternoon, everybody.
Good morning, thank you.
Oh, sorry, good morning, brother. So, when I first of all hear about Islamic finance, what comes to my mind before I joined this industry is, it's tailored towards just Muslims, to be honest. But my inquisitiveness made me just want to get an understanding of what actually happens in the industry. And that was why I started trying to read about Sukuk and everything. And so far, so good. It's I see that it's not just Muslim that are meant to be doing these things, but the education we have about it, it's actually the one that is making us not understand the basics of Islamic finance. It's something that it should be inclusive to everybody, and I think maybe because the way it is coined, people would not really get it. When you say, oh, you are doing Islamic finance, people just say, oh, Muslim thing. When I tell people I'm working in Lotus, and they'll be like, oh, you're working in Lotus, are you a Muslim? And I'll be like, no, I'm not Muslim, I'm a Christian. They ask me, how do I even cope to be working in, but it's just normal finance. In another aspect of leaning towards ethical leaning. I think if it was more focused on saying ethical finance, probably people would have been open to embrace it more than just coining it Islamic finance. This is my own perspective, though. Thank you.
Yeah, thank you so much.
Incidentally, I mean, I think we took this into consideration, labeling non-interest finance here in Nigeria. It's actually labeled non-interest finance. So does that make it more comfortable and more inclusive rather than Islamic finance? Yes, non-interest finance makes it more open. Do you want to take another remark, or we're good to go?
Yeah, it's good. So,
just
sorry
to interrupt. We have a car, a Highlander. It's a green-colored Highlander, plate number LND 297HB. You need to repark, or you'll go and claim your car at Alausa. Okay.
All right. So basically, that was the reason why I asked the question, because a very popular VC in Nigeria reached out and say, "Oh, Ibrahim, I'd like to have a conversation with you." A female, I mean, one of the biggest. I mean, a female. So I won't mention the name. Ibrahim, I'd like to have a session with you. And then we had our conversation, we had our pitches. They get very interested. And then she's a Christian. But when she reached out, the meeting links they sent to me, VC times Halal Bank Sharia compliant. Right? Sharia compliant. So the other time I spoke to another VC, they said, no, don't mention Islamic finance. I mean, they really do not want to hear it. Not because he hates Islam, but then because he knew that the moment you stereotype, right, it's going to reduce the market size. So there's a need for us to, whenever for example, in every organization, in every Islamic Sharia banking or non-interest bank organization, we don't want to hear loan. The word loan, right? We don't want to hear it. So they rather tell you call it facility, right? So non-interest facility. But the word loan has to be eradicated from the system. And that's the real fact. So we need to embrace ways and methods that it can bring everybody together. So our motto at Halal is called, we say the everyone's bank, right? It means that we are for everybody. From our facility.
You might be for nobody also. I'm for everybody, I'm for nobody.
No, we're just for everybody. Okay. Anyway, so it means that, we want to cut across everybody, from teens to adults, to businesses, to individuals. That's what we're trying to do. Now, when it comes to the communication, I believe that, there's a need to rebrand that position. Also, one of the most effective, we have to look at some of the most effective ways of, actually reaching out to people. I mean, the channels. So the channels has to come from, majorly from social media. I had a conversation recently. We're having a strategic session. Then we figured out there are really a very low number of teens or young people that you see on Facebook now. And initially, we were the one who bloomed in the early 2010s, and since 2010s, since 2011, I didn't just, that's true, I wasn't on Facebook anymore. So since 2011, so my profile was just there. And especially, people who are not social like me. But then we were trying to make that research, and we realized that, a lot of, in fact, 13-year-old boy or girl, you see them on TikTok. So today, we need to leverage on those kind of channels, right? To drive content, advocacies, non-interest opportunities through those channels in order to be able to reach a very large audience of these young people. So because it is when they have the knowledge, we can tell them, oh, we have a Teen Savers program where you can actually earn non-interest returns. It means that we are grooming our generation, right, to be ethical in their living in the longer time. And so Instagram, Facebook, and all like that. If a betting company can be leveraging on celebrities, influencers to drive betting, and today is one of the most catastrophic way of, our young people are going into, and they are getting themselves messed up in it. Why can't we leverage on influencers that have moral concepts, right? That are driving content that's non-degenerative to drive Sharia finance, ethical finance for us too, as a bank, as a fintech company, and all. So, because the real fact is that several researchers have shown that, with influencers, you can actually sell more because they tend to trust you. We have some, in-house strategy we leverage on that. We didn't pay a single naira on our marketing, and we had over 30,000 downloads in the span of like 5 months, right, before we closed the product. And then, so we had to say, okay, I think because we are saying Sharia, we have to rebrand ourselves, we have to strategize, in order to reach a very larger audience. Okay. So that being said, one of the major areas I can see that is challenging for a lot of people to actually key into to non-interest finances because of the misconceptions. Apart from the fact that the information is not reaching people, but the few people who reached. Okay, so for example, let me say personally myself, it took me close to 7 years, right? Yes, exactly. 7 years to open a non-interest account. It took me 7 years. And before then, my bank used to say, Ibrahim, the regional bank manager of my bank used to call me and say, Ibrahim, let's give you money. I said, God forbid. Let's give you money. In fact, still of recent, we want to be a part of what you're doing. Right? And I can say, how did I find myself in this space was due to my personal pain point, right? My personal pain point. It was a personal, pain point, and I really wanted to solve the solution, the problem, I mean. That was why I found myself here. And it has been so personal till now, right? And to quote what Mr. Bashir mentioned here earlier, that we have to stop signing documents for 3 months, right? If we really want to, to achieve success in a very short span, we need a very sensitive collaboration, whereby each parties have to be very sensitive to what we're doing, right? We have to be really fast when it comes to approvals. We have to be really collaborative. We have to be really able to delegate resources for such collaborations to work effectively. Why do I need to be onboarding with a bank for 6 months, 1 year, and we're not able to do it? For settlement account. It doesn't make sense anywhere. Well, and I used to say, this is 21st century. Technology is very fast, and talents are available out there that you can, get them and pay them very well. But one of the challenges about, Islamic banking, non-interest banking, or fintechs coming out, barely today as we speak, there's no non-Sharia compliant fintech out there. Or Sharia compliant digital bank, full digital bank out there. Okay. We're doing that right now. But it's very tedious. We've had a conversation sometimes over last year, and still yet we're still in the same dilemma. So it's actually, it's something we need to I'm actually aggressive. Sorry.
No, I think it's the passion. It's more
because I feel pained about it. I feel pained. Non-interest banks needs to come up with the infrastructure. I mean, good technologies that can easily make them, other fintech companies to come on board. Just imagine if one of the partners that were supposed to, they say, oh, so bank cannot onboard you now because they don't have the requirements. I mean, I'm talking about Sharia compliant bank in Nigeria. So we need to step up the game, honestly speaking. If we really want to be a part of this and we really want to do it well, we need to really step up our game. I didn't want to partner with a conventional bank just because I want to be able to tell my customers, see, your money is in a non-interest bank. We're non-interest fully. Because your conventional bank have the privilege to use your money for other things that is interest. And I don't want that. That is the only reason why I'm not out. In fact, we're almost done with our papers, but then I called myself back. My board gave me approval to work with other. But then I called myself back and say, oh, Ibrahim, this is not the direction you intentionally wanted to go. This is like an improvisation. So, and do you really want to? I asked myself, I sat down and I asked myself, I said no. But 6 months down the line, we're still not out yet. But then I know that for sure, once we're out, what we're intending to do is to power other fintechs. Once we are out, we're building a banking as a service platform already on the pipeline. So that non-interest fintechs can leverage on our own infrastructure to grow, to build their products and also, get to the market faster. Thank you.
Thank you so much. Just winding down now, I would like to take remarks from everyone, but it will be answering this question, basically. As stakeholders, because you all are stakeholders in this space, how do we get more people to understand Islamic transactions to reduce the bias within the market? Because that's what's really preventing the awareness from getting to where it needs to get to. So I'd like to start from Mr. Femi and come all the way back to me. Jazakumullah khair.
Okay, number one is that I'll quickly also want to add to what Brother has presented. For Islamic finance, for us to be able to address the gaps, one of the things I also think that we must create a viral effect. Viral effect is an innovative marketing strategy that it will help the financial institution to reduce their OPEX, and then it drives value. So I'll give you an instance. I joined Etisalat sometimes around 2014 or 2013. When I left Access Bank, right, I walked straight to Jai's Bank office at Awolowo Road. Then they were operating a regional bank, right? I walked into their office, their regional, it's more like an outfit, not a branch, to open a bank account. Because, the constraint I had then was that if you work in a bank, your salary account must be domiciled in that bank. So as I was leaving Access Bank, before joining Etisalat, I opened Jai's Bank account. Today, I have Jai's Bank account. I have Lotus. I use my GT Bank because, they were able to catch me young then, when I was in university. But the only conventional bank account today that I use is Guaranteed Trust Bank. And I give those banks feedback. I give Lotus feedback. I give Jai's Bank feedback. Because one of the challenges we have as Muslim is also that you are benchmarking. You are benchmarking GT Bank to Lotus Bank. It's fine. We have to benchmark. They must deliver exceptional services. But we must also understand that, it's a learning curve. They will have one or two pain points that you also have to address them. For example, one of the companies that are founded in ShoreTech is the one powering Jai's Bank USSD service. So one of my company powers 773 Jai's Bank USSD service today. And what is the problem? One thing I observed is I told Jai's Bank then that you can have an account opening using BVN on your mobile phone or your USSD. Because today, if we say that financial inclusion, and FINA is there, correct me if I'm wrong, is around 64%, right? What does that mean? That tells us that if we even show a statistic that 64 million youths, we have 100 million youths, right? If you say 64 million are financially included, I'm just saying, if 50% of them are Muslim, what it means that 32 million are already banked. Why are they not Why are they not banking with the financial institution, Islamic financial institution today? So what is very important is that we create a viral effect. You yourself, we that were here, let's be an advocate of educating people, telling people that, do you have Lotus bank accounts? You know, do you have an investment account with TrustArthur? Today I have my investment account with Lotus Capital, and I'm still coming to my brother TrustArthur anyways. You know, so I don't have any other my investment account anywhere. I got a facility from a bank, NIB, it's facility from a conventional bank, and he gave me an open check. I don't want to mention the figure here, you know, but they gave me an open check to just sign the facility uncollateralized because I have a relationship with them. However, I look at myself. They gave me the letter to just sign uncollateralized. And I look at myself and say, man, now you have entered it. You have a partnership with them. They know you need funds for transaction. They know that you cannot run away because they will debit and credit the GL. Now they offer me uncollateralized loan. Riba. But alhamdulillah, Lotus Capital was able to address the pain point. Yes, they matched it and they gave us a better offer. Same uncollateralized anyways. Alhamdulillah. But there's collateral, you know, at least they did their due diligence. So what we're saying is that the NIB, Islamic Financial Institution, has also got, they need our help. Let us be an advocate of this institution. That's number one. Number two is that, so the Islamic Financial Institution, there is a saying that if you are in an emergent strategy, if you are launching an emergent strategy or you have an emergent strategy, money should be patient for growth, but impatient for profits. So let me repeat that again. If you are an emergent strategy, emerging ideas, or you are testing the waters, money should be patient for growth, but impatient for profit. I think where we are here today, but if you are doing deliberate strategy, meaning that you have tested that model, you know that this is the way to go. The money must be impatient for growth, but must be patient for profit. What am I saying in essence? I think that for Islamic financial institutions, we have tested a model, which is the emergent strategy. And we have seen that this is the way to go. It is profitable. We've seen financial institutions, maybe Lotus Capital became profitable in 3 years, Lotus became profitable in year 2. You know, if we are profitable in year 2, then money should be impatient for growth. At that level, what I should be doing is that I am not disclosing profit again, but I want to spend money to acquire more customers. And then if I'm able to acquire this more, because you cannot have a high OPEX, operating expense. I know that I have my leaders there. You can't have high operating expense and your bottom line will still be as profitable as you expected. And I know that we've got shareholders. So shareholders too need to understand what is our strategy. I cannot grow, right? I cannot grow organically. And at the same time, I still want to be profitable in the short term. No. I'll give you an example. I was in a panel session at Digital Nigeria, right? And I met a venture capitalist. And the guy was telling me, we're talking about, investing in my business, though I don't need their money anyways. I know where to get my money. So, and we're discussing. And the guy said, and I told the guy that my PBT is positive. He said, your PBT, I said, yes, profit before tax, not my EBITDA or my revenue. And the guy said, Femi, how do you combine growth and profits? You can't combine the two. You'd rather take one. It's either you want to continuously become profitable and you cannot grow organically, or you want to grow organically and then you have a strategic plan. So I think shareholders, guys that will also be investing in non-interest banking, we need to understand this model. If you look at Nubank in Brazil, in North America, in 10 years, it's the biggest digital bank in the world. In 10 years, they were able to acquire 86.1 million customers. And what are they doing? They were not sharing their bottom line. They were aggressive with growth. And when they were able to achieve growth, now they are now forming strategic partnership. And that is what the telco are doing. Telcos in their first 10 years, first 15 years, they were not concerned about the numbers, the bottom line. They were just investing in CapEx, growing the numbers. But today, they are making money from adjacent businesses. You see everybody wants to partner with the telco because they have the base. And that is what we should position ourselves to do. The shareholders, the guys that are investing in Islamic financial institutions, we have tested the model. The deliberate strategy, which is growth should be patient for profit. Money should be patient for growth, but impatient for profit. We've seen it that it has worked. Now, growth, money should be impatient for growth, meaning that we need to fund it, scale it, have TVC, have TV communication, marketing, let people know about the product, because we know that in the long run, it's going to be profitable. Lastly is that for policymakers and the likes, I think this session is very good. I'm very happy that I'm here, because I had it tight. My brother, Dr. Bashiro, should understand. I had a tight schedule, but when my plan changed, I said I have to be here, and I communicated to him this morning. This strategy that we are deploying is a win-win strategy. It's a win-win strategy because the financial institutions, the NIB, are not seeing fintech as competitors. In the conventional banking system or financial industry, that is what is happening. So if you see me as competitor, then I will see you as, if I give you a solution, I partner with you, you will kill me. That is what is happening today for some of us that are aware. We have banks creating ODCO, right? Having a fintech subsidiary, right? So if you're having a fintech subsidiary, you are automatically diving into where I'm playing. And in the long run, you're going to kill me. So, and at the end of the day, it's not a sustainable strategy for them, because a bank A that has a fintech, bank B has a fintech, they won't relate because they will just be. So at the end of the day, what I think we're doing is great by having a strategic plan to enable the fintech. We also have to look at it in terms of proposition that's going to be a win-win model. I'll tell you for sure, most agency banking, guys playing in the agency banking, they are not successful. Why are they not successful? They are not successful because the banks, conventional banks, are just seeing them as a tunnel. So I go to the rural area, I will launch services, then I'll mobilize maybe 20 or 40 or 50 billion for you. However, once you get that money, you use it for loan and the likes, However, nothing comes to me. At the end of the day, you've gotten the customer, I became a tunnel. That is what is happening. I ran a number. I was looking at my budget, because I'm payment enablers, and I was looking at my numbers. I said, guys, maybe let's even try to deploy 5,000 devices next year. We're just playing around with the numbers. And I look at the numbers. I said, this thing can never be profitable. And that's why you're not seeing the agency banking outside there. The likes that are profitable, they are competitors to the bank. Some people say Money Point is a fintech. It's not a fintech. It's a bank. It's got a microfinance bank, right? It's competing with the banks, and the banks know. But how many fintech that are meant to be an enabler to the bank? So it must be a win-win. And that's why I'm very happy with this program. We must come up with strategic plan that will enable both the fintech, right, and the bank. I'm willing to partner with the bank. But imagine I partner with you. I deploy, I buy devices at 100,000, right? And I deploy those devices. 100,000 times 5,000 is 500 million. And I'm looking at the model. In 4 years, I've not even gotten the money that I've invested in buying those devices. If I approach Madam, my sister, my brother, Dr. Bash, say, where is the model? How, God, this thing cannot pay itself back in 4 years. It won't work. But if I have a situation where, yes, I'm going to the rural areas, I'm going there to understand their pain points, I'm deploying devices that will enable them, because soft POS will not work in that place. Soft work is not ready for the market, yes, because there are some other technicalities. But I'm going there, I'm deploying devices. However, those money that comes into the system, maybe I'm partnering with TrustArthur or Lotus Capital as investment product. We have a win-win model. A win-win, don't worry. For every money you mobilize, you get this and you get that. And that is what has worked for the telco. Telco have what they call ongoing revenues model. So for every customer that woman on the field gets for the telco as a SIM, the customer will continue to get revenue on that for as much as that customer is using that SIM. They will continue to get revenue. Then it's something that we can also deploy. It may not be constant that this is what you'll be getting, but we have a model that it's also sustainable. Then fintech guys will be able to go, have that strategic partnership, go to those areas, go and mobilize the fund. Then the bank can do their core job, which is financial intermediation. So basically, this strategy is good, the strategy of enabling the fintech. So I see this program as an enabler. Don't worry, fintech, in the Islamic finance, you are not our competitor. We want to make you an enabler. If you are my enabler, what that means is that you are agile. You are running a lean team.
You're on the field.
You're on the field. You can try as much as possible to understand what the customer needs to get done. The job of the customer will not change. You know, I usually pitch that. My job will not change, but I need help. And that's where financial technology guys come in, FinTech. We will use technology to address the customer pain points. However, I'll bring those customers to you, you know, and then we can address, because if not, what will happen is that the FinTech guy will also see us, NIB, as competitor. And they will not start going for non-interest banking license. And that is not where we are going. Indeed. What we should get to is that let FinTech stay where they are. You are enabler. Let the bank, you know, work with the FinTech in developing solutions that will drive fund, you know, cash into their own system, cheap cash in quotes, you know, and Dr. Bashir, so, you know, so that they can now do financial intermediation and everybody will win. And it becomes a win-win model. Right. Thank you.
Thank you so much. As we wind down, your closing remarks, sir.
On this?
Yes, absolutely. I hope he hasn't said everything you wanted to say.
Yes, thank you. He has made a lot of points, actually. But on that's getting people to understand Islamic finance. I think it has to do with trainings, too, for the workers at the Islamic banks. So I'm not sure all the Islamic bank workers are actually trained on Islamic finance, because they are the first contact to the customers. I've experienced this in the past. They're, like he said, everyone should be an advocate for Islamic finance. I am myself, actually. I challenge SME that do not use Islamic banks. Why are you not using Islamic banks? I challenge them always. And I think, and we also have to take this to our institutions, academic institutions like universities and all those academic institutions. I think those are the places I think we can achieve that. And I think that's for me, actually.
Thank you so much, Mr. Ibrahim.
Thank you. In a few weeks' time, you'll start seeing our Halal Money series. So what we're intending by that is, you know, we want to leverage on social media to advocate to everyone about the non-interest finance, Takafu, Sukuk, and all like that. I imagine a lot of things, and honestly speaking, the future of finance is Sharia compliant. Because, I mean, it's simple mathematics. You give me money for 5% monthly, and unforeseen circumstance, it happened, the APR had to increase to, you know, more than 60% in a year. Had to accrue cumulatively, because I was not able to pay back in, say, 6 months. I had to more than 60% at the end of the day. And somebody is coming to me and saying, Omoibo, let me give you this 1 billion. How much is your capital? 500 million. Let me give you 1 billion. Bring those items from China and sell it. Just after 6 months, give me back in 2 ways. Return my profit and capital in 2 ways. Musharaka or Murabaha. If I'm paying for you, that's Murabah. I'm paying the supplier through an agency, Wakala. I'm adding a cost plus to it. Say, maybe my cost plus is 20% over the time. I'm rest assured I'm getting my money back, right, in 6 months. Or, let's do this on profit sharing. I give you this 1 billion. You add your 500, that's 1.5. So it means that I brought more than 75% of the capital. When you do the business, because Sharia banking has to be equity-based, and there must be fairness. That's some of the principles, right? And it means that even no matter how, we cannot share 50-50 on the profit, right? So let's say you take 60%, give me 40% of whatever profit. Maybe the profit is like, you know, let's say 50% of the money, maybe 500 million. Just give me 40% of it. I'm still happy at the end of the day. The guy is going to be extremely happy. At a point of time, we knew that Jaiz Bank, we had that major customers in Jaiz Banks are the Igbo guys. Why? It's because they understand the rudiments of the business, right? And they knew what interest then the non-interest is doing for them compared to the interest they've been taking before. So I always say that Sharia banking is actually the non-interest financing is the future of financing in the world. And how do we tap into it? When Malaysia has already been doing more than 90% of it. So, but how do we, and they are happy over there. Just imagine this guy that owns the biggest microfinance in Pakistan, distributed over 5 billion USD. And they happened to record over 99%. So just imagine if that can be done. Fine, we had Nigerian factors too. But then when people start reasoning to Sharia compliance, I believe their consciousness will tend to change too. Because we are not going to be telling people, come and do non-interest finance so that you can take money. That's part of positioning. We are telling you to be conscious. It's not faith conscious, morally conscious. We are tending to change your mindset. We are not giving you money to go and play lotto or to go and start a pig business or alcohol company. We are giving you money for a business that is Sharia compliant, that can be morally indulged in. Not a business that we actually bring it. We knew it might even be legal. Legal doesn't mean it's right? So we have to be morally conscious when it comes to the advocacy we're going to be telling them. So that by the time they take money from us, we are certain that, oh, this person we're giving our money to will definitely, use it right and be able to return it back to us.
Jazakallah khairan. Thank you so much, my panelists. It's been an explosive one. I do hope you've gained something. We're moving straight to the next. It's a product session. I hope there is a camera to take a group photograph of the panelists. Please just stand together while they take a picture. I would like to invite Hamida Oyekon and Kristen Salami to be on standby. Pictures, please. I would like to invite Kristen Salami and Hamida Oyekon. Hamida is the head of sales at TrustArthur. They will be putting us through a product session right after this. Okay, hold on 1 minute. Dr. Bashir will be joining. Thank you very much. Thank you. Please a warm round of applause for my panelists as they make their way back to their seats. I'm going to hand the mic now to Kristen Salami and, of course, the head of sales, Hamida Oyekon, as they walk us through a product session of just Kristen. Okay, you've kicked Hamida out. Okay, so anyways, Kristen, it's over to you. Please come up.
Okay, good morning, everybody. Okay, good morning, everybody. My name is Christine, and I'm in charge of corporates for TrustArthur Limited. My colleague is somewhere on standby, but I'll be the one anchoring this session. First of all, I would like to welcome everyone here, and a warm welcome to everyone seated here for honoring our invitations. We do hope that going forward we'll be able to handle more sessions, and this would be very productive. I'll be handling the product section, and this is just going to be very briefly. TrustArthur over the years has come up with different structures, different products, different portfolios that would suit individuals and corporates. And so the MD, who is Dr. Bashir Oshodi, has the pedigree and has over the years worked with the non-interest space. He's been involved in development of product portfolios, and I'm sure a lot of us would be familiar with what he's been doing in the past. And so he's brought his experience into TrustArthur, and here with TrustArthur, we are able to structure products for everyone to address everyone's concerns or needs, and most of our products are fully compliant. We have products we have the retail products. Our retail products are like the Wadia. Wadia is like a target saving. Say you have something, or you have a product, or you have a target, and you want to look at buying probably a building, a property. You want to pay your children's school fees. You're just looking at doing something. Wadia is what you can look at. Wadia is basically your savings. You can decide to do this on a weekly. You can decide to do this monthly. It's just you being disciplined, or deciding to be disciplined with regards what you want to do. Say, okay, I'm putting aside a particular fund, and I want to be doing this maybe weekly. It depends on how you've looked at it overall. And then you have the Sukuk note. We have the Sukuk notes. The Sukuk backed note is has been derived from the Sukuk, the federal government Sukuk, which is an arranged asset. The Sukuk backed note. It has the federal government asset backing that, and so we've opened that up for subscribers to come in and invest, more like in like a secondary market where people buy into this portfolio and decide to invest either on a long term or on a short term. I would like to add that most of our investments, all of our investments are long term and short term. So it would depend on what you want to do. You want to do something for 365 days. You want to do something for the next 5 years. Obviously, the longer the better for everybody. The longer the better for your funds. The longer your fund stays, the better the funds will be doing. We also have the real estate notes. We have the real estate note has it's a portfolio where you have real estate investments. We have that assets on ground. You have assets that have been that have done about 80% completion. They have done about 60% completion. They have done about 90% completion. And then we have people, or we call on investors to come in and invest in this portfolio. It's fully compliant as well, because it's real estate, and we're hoping that we have more people coming. We also have the commodities. We've over the past few years and in recent times, we're doing more of the commodity trading, and so we're calling on investors to come in and partner with us. We're calling on investors, people, we're calling on individuals, we're calling on organizations to come in and look to partner with us with regards to this aspect of the portfolio. So we have commodities, we have oil and gas haulage. This over the years and in recent times we've seen that it's a growing opportunity, and we're looking at expanding this portfolio as well. So we're looking at our fintech companies. We're looking at individuals who would really be interested in this part of this aspect of our portfolios to come in. Let's partner. Let's partner. Let's expand. It's an opportunity that a lot of individuals or a lot of businesses have not been able to really look at or really tap into. We also have the fixed income, where it's more like we decide on or we agree on, okay, you want to keep your money for 365 days, and we agree on what the profit margin would look like. And I know that we have the TrustArthur team here, so for anybody who has questions, who has inquiries, you can walk up to me. I can drop my cards. I will drop my cards on the table so that we can take the conversation further than what it is right now. And we also, just to add to it, we also structure, or we are involved in, like, you coming in, you tell us, okay, this is what you do. We can structure something to fit into what your business would really, what you want for your business. So you just tell us, okay, this is what you're looking at, especially for the fintech companies that are quite innovative, or looking at adding products, or looking at, coming up with something new to the public. You want to push out something that is quite interesting, and you need a company, or you need someone to guide you through the structuring of these businesses. You can call on us. We're available to handle all of this. Thank you.
Thank you very much. Thank you. That takes us to the second panel session for today. Bear with me. I have left the question and answers for the very last part of today's gathering. So once we're done with second panel session, then the floor will be open to take all of your feedback. The second panel session will be moderated by Mr. Moshood Babatunde. He's the Executive Director and CFO of Lotus Capital. Mr. Moshood is the Group CFO of Lotus Capital Limited. He has over 15 years of financial and business management experience in the financial sector and capital market. His areas of specialty include corporate strategies, financial advisory, investment portfolio management, treasury management, business restructuring, audit, tax management, financial performance measurement, enterprise risk management, and business analytics. At Lotus, he is responsible for overall medium to long-term corporate business and financial strategies. He has successfully developed and implemented various strategic turnaround, innovative projects. He has previously worked as an accountant with a consulting and project management firm, McCoy Zam Nigeria Limited, where he was responsible for field project management, business operations, financial management, and reporting. Mr. Moshood will navigate us through this next panel. The topic is navigating fintech crowdfunding for portfolio development in the non-interest finance space. Please give a warm welcome to Mr. Moshood as he takes his seat on the stage. Looks like we'll need one more chair. So if you'll permit me to just grab one chair for you here. You have 4 panelists apparently. So you'll sit here. Joining him on stage, I'd like to invite Ridwan Sanusi. He's the founder and CEO of Al Credits. Please join Mr. Moshood on stage. Please encourage my panelists with a round of applause. Following him, right behind, Shanu Oluwasegun. He's a fintech enthusiast. Please continue with a round of applause. Joining them is Abdulaziz Oguntoyinbo. He's the CEO, founder Halal Vest. Please keep the rounds going. And last but not the least, Mr. Monsur Olaniran. He's a co-founder, CTO, Stex Financial Technologies Limited. Okay, he's on his way, so he'll join us.
Okay, thank you very much. It's so exciting to be here today. And we have been listening to various innovation that is going on in the world of fintech and Islamic finance. We can imagine how 2 more important innovations are reshaping the way we do our investment and we are funding our businesses. Today, we will be navigating the fintech and the crowdfunding. I mean, it's been a very buzzword that people have been talking about. And we will be navigating around it for product development in the non-interest. and you are the one beautiful. So in the non-interest world, with me we have a very eminent panelist that we will be discussing this together. For most of us that have been in the world of fintech and non-interest finance, we would have found ourselves in one situation or the other where we are looking for how do we fund this business in an ethical way. Should we move to the bank? Should we talk to asset management? Should we speak to finance house? But the most important thing is that we want our businesses to be funded in an ethical way for most of us that have that preference. So today, we'll be talking about the crowdfunding. Is this something that is really interesting? Is this something that is really taking a center stage? And we will start by asking, what's this all about? All over the world, people have been talking about crowdfunding. They've been using it to fund different projects, different businesses. And I will start with Shegun asking about what is crowdfunding all about and how does it work?
Okay, it's still morning. Yeah, good morning everyone, and thank you very much for inviting me to this wonderful session. So, going straight to the question, crowdfunding. What is crowdfunding? The word crowdfunding might sound like a very big buzzword to every one of us here, but it's actually something that has been around for a very long time. Two words coming together, crowd. That's you pulling people together, and funding, bringing money. So in essence, crowdfunding is basically a way of raising money for a business or venture by pulling a group of community of like-minded people together. Let's say you have an idea that you are trying to pursue and you don't know how to go about it. One of the easiest way for founders, which I believe, because if you go to the conventional banking industry today, raising money, it's very hard because of the interest and all of that. But what crowdfunding basically does is you have people of like minds, people that shares the same goal with you. You are able to pull them together through a platform. Now, there are some basic elements that must be in place for you to have a successful crowdfunding. And what are those major things? First, you need to have an idea. There needs to be a project. A project is an idea or a business you are trying to pursue. If you don't have a project, you don't have an idea you are trying to pursue, you cannot have a successful crowdfunding. Now, you having a project is one of the elements. Now, another element for you to have a successful crowdfunding is that there must be a platform. Now, because of the word crowd there, you are pulling people together. The easiest way for you to pull people together is to bring them in one place. So there needs to be a platform. Crowdfunding today has evolved as a result of the of buzz of social media. For you to, today, if you want to do a crowdfunding, you need to be digitally savvy because it's mostly done online, where you have to pull people of like minds together on a platform for you to achieve that goal you are trying to achieve. Now, another element that is very important for you to have a successful crowdfunding is that there must be a financier. Having got the idea, the project, there's the platform where you have people who are willing to finance a project. You need people that has that money to be together. So it is very important that there must be a financier for you to have a successful crowdfunding campaign. So the three elements are: one, you need to have a project. That is the idea you are trying to pursue. What are you trying to do? What business idea are you trying to execute? What products or services are you trying to give to the people? There needs to be a project. There needs to be an idea. Secondly, is that there needs to be a platform. You cannot just gather people and not organize them. Organization is very key, which is where crowdfunding platform comes in. What crowdfunding platform today have been able to do is they have these financiers that have money that they want to invest in a particular field, that this is what I like to invest my money in. And when you bring your idea to that platform, you have people of like minds that if they fall in love with your idea, they will say, oh, okay, this is a good idea for me to work with, and they can work with that. Thank you.
Thank you so much. You have explained how crowdfunding works and how crowdfunding can be used to achieve certain project. I mean, to fund certain projects. But it's important that we know what crowdfunding is all about. How, and I will come to Abdulaziz. Does crowdfunding have any role in non-interest finance? Do you think it has any role in non-interest finance?
Yeah, thank you very much. Based on the analysis that has been given by my co-panelists, if you understand the benefits of crowdfunding, people need to get a project financed, and they are actually looking for different channels to do that. They don't want to go to conventional banks, and we're talking about non-interest finance. Access to non-interest finance is very limited. If you look at different use cases we have currently, different businesses, MSMEs and the likes, they are in need to get their business funded, project funded. So where does crowdfunding comes in? So I'll give you a perspective from the one tool that can be used, which is, for instance, the cooperative model. So if you look at that, which is where currently Al-Alba is actually playing. So when you try to gather people, and with the kind of interest to support each other, if you're looking at the non-interest finance based on the principles, you have the equity and fairness, risk sharing. They want to actually gain invest in different alarm businesses. So leveraging cooperative model is actually a platform that can be used, tailored to finance projects or any kind of startup ideas, So what we do basically is we have a cooperative platform, and with that, people don't want to go to the banks, like I said, the conventional banks. So we have like minds. They come together, they save, and they also invest in businesses. So that kind of model, in line, layering that on the non-interest, principle, right? You can see it's really going to go a long way to democratize access to non-interest finance. And that's actually a way that many other organizations today that are leveraging this channel of conventional financing, they can also use that. We've actually done a pilot on that, and we've been able to demonstrate, the capacity that can crowdfund any project in the non-interest space. So another interesting thing is that, we already have been discussing about the benefit of non-interest and how it needs to be, showcased. You have it, basically, you have different, players within that space. You have the non-interest banks, you have the non-interest investment companies. Who are those to actually reach out to? If the cooperative model is not sufficient enough, right? There are different platforms that you can also leverage on with a partnership with these non-interest financial institutions, which they can also facilitate the financing. But the cooperative model is actually a way, layering it on the non-interest finance, right? And it can really support the growth of those entrepreneurs within the ecosystem. And this is what I believe we can leverage on. We understand the potential of non-interest finance, The potential of cooperative model is also there that you can leverage on. You know, people don't want to actually consume interest, you know. So if you actually power that, I think it's another tool for you to crowdfund within the non-interest space, considering the potential of what has been done. We have different use cases, even both in Nigeria and other countries. You know, there's a platform called Etis. I think they are based in Malaysia, and they've done this successfully. You know, the crowdfund project for those that are members, and you know, based on the analysis that has been given for what a crowdfunding platform, you know, does, it is also Sharia compliant in terms of what businesses needs to be funded, how is the risk going to be shared, and how is the profit going to be shared. So all these are elements that needs to be put in place, and I believe it's really a very, very viable model to scale any crowdfunding, you know, project, leveraging non-interest finance.
Thank you so much. We are beginning to understand the benefit that we can get from crowdfunding platform, most especially the way it can be applied in non-interest finance. Before I go to another panelist, you wanted to add to what he said, and we've seen cases where crowdfunding has been used for different purposes apart from funding personal projects. In some other jurisdictions, we have even seen cases whereby people can actually use crowdfunding to access funding for invoicing, for real estate projects, and for some other things. Who can actually access this crowdfunding platform? If I may ask you, Shegun, you wanted to add to it before I move to another panelist. Who are the people that can access crowdfunding platform, and for what kind of project crowdfunding can be useful to?
Okay. So, just as a follow-up to what my co-panelist said, yeah, there are different kinds of crowdfunding platform across the world that serves different purposes. So, my advice to founders would be, depending on the type of project you are trying to execute, you do your research and look out for the platform that offers support in that area. There are some platforms, what they support is basically people that are going to real estate and finance. There are some, what they support is basically if you are just going into tech. There are some, what they support across the world is just government projects. So crowdfunding platforms are open to all, not just fintechs. Even if you are doing real estate, MSMEs, and all of that. So there are different platforms for different purposes. In fact, there are platforms for NGO organizations, like you want to do charitable works. There are platforms that are available for such initiatives. So it's, the onus is on you, based on what you want to do. You do your research to look for, oh, what platform can I go to raise these funds that I need for this project? So that's it basically. So it's open to everyone.
Thank you. Just to remind us that we are talking about financial inclusion, and that informs the reason why I asked that question. We are talking about how we can bring a lot of people into financing system. And we've just heard that it's open to everybody. It's just for you to identify the kind of project that can be accepted by the investors, and the one that will also be able to appeal to the people that will be supporting. I'll be moving on to Mansour. We've known what crowdfunding is all about. We've also understand who can actually benefit from this crowdfunding. I'm just curious, in Nigeria, who do you think play in this field? Who are the people that we can focus on? Are they banks? Are they fund managers? Do we have crowdfunding platforms that are currently operating in Nigeria? And how do we merge non-interest finance into this so that people can actually understand the existence of this platform and who they can speak to.
All right, thank you very much. I'll start by saying it can be managed or controlled by any financial institution, right? However, I see it as something that majority of conventional banks may not want to go into because of the challenges that comes in as a result of vetting smaller businesses, right? However, the key people that will play well in this space are startups that are more tech savvy, that can leverage on modern technology like blockchain, and some other things that can easily make it more, how do I say, controlled, okay, secure, and also easily accessible. So the barrier to entry will not be complex. You can do as low as the smallest amount of money anybody could have, right? As well as people that have large amount of money can also get into it. So a lot of startups are looking into the space currently, but I've not seen a major platform that is well known, except the ones that are playing in the space of donation-based crowdfunding, because there are various types, right? We have equity-based, we have donation-based, we have reward-based crowdfunding. But the donation space has been around even without tech, right? People go to the masjid and say, hey, somebody needs an assistance, and people funds together to support the person. But now we have also platforms, foreign platforms are already doing well, like Kickstarter, for example, that help startup founders that have viable ideas, showcase it to people that may be interested in putting in fund into their businesses, right? And they're big on it. So we have a couple of platforms out there. I mean, it's not like public or known so much, but my brother there, Ridwan, has a platform that does something similar for businesses, Harvest. My company as well, Stex, we have a product we are about to roll out that allows people to collectively have access to projects that are viable, that they can put in their resources into and get reward within the the Islamic values, right? But currently, yes, people are playing, but it's not big as it's supposed to be yet. There's still more to be done, and I feel a large part of the work has to be done by companies that are just setting in to the space currently. So that's it from my side. Thank you.
Thank you so much. We are beginning to understand the ecosystem of crowdfunding, how it works, who can benefit, and who are the people or platform that are offering it. I was reading something about the Kickstarter that you just mentioned, and I read that they have raised over $4 billion, funding over 150,000 projects. That's not in Nigeria, but it is underpinning the fact that it's not a new thing, and people are actually using this platform to do wonderful things. And we just encourage our fintech experts in the house and other people that are also listening to us online to expand this space for other people to be able to key into it and see how we can use it to also deepen the financial space, most especially for the SMEs that have not been able to get all the required credit history that can give them that credit. I will just move on to the next question here. We are talking about the fintech, and globally, everybody is racing towards artificial intelligence, blockchain, all these buzzwords that we are hearing everywhere. And it got me thinking, this crowdfunding, is there a space for this innovation? And if there is, how can non-interest tap into that space to see how we can improve the client engagement and the product offering better? I will come to you, Ridwan, to answer the question.
Thank you very much. Before I answer your question, I'd like to say thank you to the organizers of this show. It's an exciting show, and I would want to encourage all our financial institutions to do this on a regular basis. Thank you, Dr. Bashir, for inviting me. Thank you, Mrs. Kekere Ekun. I hope I pronounced it correctly. All right. Okay, so before technology, there is a business model. I always tell people that you don't build your business model on technology. Technology is just an enhancer. And I'll give you an example using our companies, right? I started Harvest back in 2021. And essentially what we do is to crowdfund. But the way we crowdfund is to mobilize funds from investors that we understand their investment philosophy, we understand their investment thesis, and they are a right fit for our products. So that's why we are not that known, because we are not ultimately admitting retail investors. So we're very, very careful as to the kind of people that we admit into our community. And we've been doing that for 2 years and 9 months. We've done well over $3 million advancing credits to small businesses in Nigeria. And we have done that. And we have done that without technology. Now, to answer your question specifically, artificial intelligence and blockchain definitely have a role to play in facilitating transactions for ethical fintechs. But then again, I want to repeat what I said. Your business model cannot be built around technology. You need to understand the business before you bring in technology. I tell my guys, we've got about 3 engineers that work with us on a full-time basis, and I tell them, if we're not going to scale these business for the next 12 months by at least 50%, then I don't need you guys, because we can as well do our business without you guys. Now, in Indonesia, there is a company called Blossom Finance. The name of the CEO is James, I think. This guy moved from the United States to Indonesia, and he was the one that kind of invented blockchain within the Islamic FinTech space. So what he does is to create smart contracts for retail investors, and then they use the funds to finance small businesses. In Ethis, recently invested in Ethis in our company. In Ethis, they also do a lot of crowdfunding. I would say that Ethis was primarily the pioneer in ethical crowdfunding, because what they focused on was crowdfunding for the purpose of providing affordable housing to Indonesians, right? Even though the business is registered in Malaysia. Now, if you look at, artificial intelligence, for example, in our company, we just floated our credits, even though the business has always been known as Harvest. We floated our credit because we wanted to provide credits to millions of merchants, not just in Nigeria, but across Africa and possibly across, the other parts of the world, if you get what I'm saying. And we can only do transactions with millions of merchants, if possible, with technology. Because imagine, a business owner submitting all forms of data, information to the team, and with just about 3 or 4 people, checking through these information, trying to ascertain whether they are credit worthy or not, is going to be too laborious. So that's where you need artificial intelligence. And I always tell founders that are my friends that don't get too carried away with technology. Don't get too carried away with, these buzzwords like artificial intelligence. Artificial intelligence would not work if there is no data, right? So, for example, if I want to build artificial intelligence into my technology, into our portal today, I would only build it because we've got merchants that we finance over the past 2.5 years, and I know what I'm looking for. So it is what you feed into your technology that the technology is going to give in return as the result, right? I mean, in some cases, you find some AI tools that are really fantastic, but the results or the outcome can be really, really poor. And that's because of the quality of the data that they fed into the technology. So artificial intelligence, yes, and blockchain, yes, have roles to play in promoting and facilitating the way non-ethical fintech, carry out the transactions, but it has to be done in a very, very strategic manner such that you can scale your operations. And it's not just about, you want to go into AI so that you can raise funds from VCs. And we don't have so many VCs in Nigeria that can give you funds.
Thank you so much, Redwan. I believe that we can all attest to it that it's not just artificial discussion. Redwan just attested to it that in his own company they've raised over $3 million, if I heard it well, and they funded various projects, meaning that it's real. If what we are looking for is an ethical way of crowdfunding, we just get that attestation. And that's also thrown challenges to all the fintechs and the community at large, that there is huge space for us to mine here, not only starting with artificial intelligence or enablers that we all hear about. I think I will pause here and possibly move to the house if we have questions, 1 or 2 questions before I come back to our panelists. Okay. We have 3 people.
Number 1. Number 2.
All right, good morning. My name is Ndako Mijindadi from Lotus Capital. A couple of questions. I think for me, the elephant in the room is, when it comes to crowdfunding, is risk. Sometimes people want to engage with crowdfunding platforms, but the question is, how am I sure it is safe? How am I sure it is secure? Especially if you're not regulated, especially if the process for reviewing transactions, is not transparent. Especially if we're not even sure what kind of risk management guidelines that you're following. You're not a bank or anything like that. So how do you assure people who are investing through crowdfunding platforms that risk management is solid? I'll just add my second question. The second one is on being responsible towards the investors that you're collecting money from. Now, within the banking sector or in the investment management sector, there is a fiduciary responsibility of the intermediary to ensure that the people who are investing through these platforms or depositing through these platforms have been properly identified as being suitable candidates. How do you do that when you're going to the crowd? Especially because, in recent history in Nigeria, we have seen that some platforms have not been very responsible. They have collected monies from people without identifying the appetites. They have gone under. Because they're not regulated as well, they do disappear. So 2 questions: risk management and responsibility to participants.
Okay, thank you. The second.
Good afternoon, everyone. My name is Karimat Ijaya. I'm a lawyer in the law firm of Alukwano Ibodi. So I would be asking my question from the point of view of a regulator, because as a lawyer, we tend to cover that scope. So I know we've had discussions around crowdfunding, but then I noticed in the discussion, we've actually not mentioned the role of SEC as a regulator, which is very important, because most times when we advise clients on structurings and the likes, you would typically see that the questions would come from the point of view of how are these people regulated, what are the disclosure obligations, what are the investors' protection mechanism that are available. And I think even outside the scope of Islamic finance, this is a general questions that tend to come up when you are even doing conventional transactions. So I just want to know, to what extent would these fintechs take into consideration regulatory overview or regulation?
Good afternoon. Mansuro Yebola, representing Integrated Water Links. I'll still go back to risk area. What is the risk appetite within the industry? I mean, the limit of risk. Secondly, you said AI will take care of the evaluating the credit worthiness of the applicants. Is there any way we can take away human factor up to evaluating somebody sourcing for facility?
Okay, thank you. Thank you very much. I think the questions are clear. One is talking about the risk management and the responsibility on the side of. First question about the risk management and the responsibility. How safe is the fund of the investor in your hands or in the hands of the?
Yeah. Yeah, I understand the question. I know Ndako directed the question to me, even though he didn't mention my name. So, yes, we ensure that we are responsible in admitting the type of investors that are a feed for the kind of investments that we provide for them. And that's why in our community, that's what I call our company. It's a community. Every single investor that invests must be interviewed by myself, because we do have a laid down policy. We have our investment philosophy in terms of the kind of investments that we give our members. So for example, these are not your typical investments that you would normally get from a Lotus Capital or a TrustArthur. These are high-risk investments. And we make these investors understand what they are putting their funds into. Every investment that we embark upon, you have a 13-page investment memo where you understand what exactly you're putting your funds into, you understand the risks, you understand the risk mitigating factors, you understand the historical performance of the business. So we have done our due diligence in ensuring that the investor that wants to put his or her funds into this project is making an informed decision. So I'm not just asking you to give us your money. As a matter of fact, it's a campaign, right? It's crowdfunding. The ultimate decision lies with you. So we're not even telling you, give us funds, we'll put it in this project. We're telling you, hey, we've gone to get this opportunity. Do you want to invest or not? Given the information that we have provided. So as far as our philosophy, our operations are concerned, that is how we operate. And that's how I believe every fintech, especially Islamic fintech, should operate. I think one of the issues that investors have with Islamic fintechs or Islamic financial institutions is transparency, right? I can see faces of some of our investors here, right? Every single investor knows how much we take from every single investment that we embark upon. So that's how we carry out that responsibility. Then the other one is about credit management. How do we ensure that the businesses that we finance, right, they are a right fit for credit management? Now, one of the things that we do, and I'm going to be very honest, of course we all know this, it's very, very risky to finance small businesses in Nigeria, right? And luckily for us, because I have a large network of businesses, I used to be a consultant, so we basically just started with the businesses that I know, right? So if you come to our community and then you ask for financing, and I don't know you or I don't know someone that knows you, even though you have good books, we can be very skeptical. So we were able to build our track record based on the businesses, that I know, and then of course we're able to build our credit management policy using those businesses, because we've been quite successful with those businesses to then advance credits to new businesses.
Okay, I will take the question on the regulatory aspect. Technology, as we know, okay, let me before going to technology.
1 minute, please.
Okay. On the backdrop of what he said, on how crowdfunding works, it's a platform. They don't, in quotes, manage customers' funds. What a crowdfunding platform does is, you go and look for investment opportunities, and you bring it to your investors. Are you interested in this? So, in quotes, crowdfunding platforms don't really manage investors' funds. Now, in terms of regulatory, where I was trying to go about technology and regulatory, technology is far, far, far ahead of regulation. In fact, it's technology that brings about regulation. When people think, innovate, and build that business around technology, the lawmakers, they are far behind. It is when that thing has evolved, that is when they will now begin to say, oh, this thing is going on, this thing is going on. How do we curb this? Technology is what breeds regulation. So currently today, I think it was around late or mid-late last year that SEC began to put face into the activities of this platform. So it is not fully regulated now by SEC, but it's something they are working towards providing regulations so as to guide and enhance the products. Thank you.
Thank you. In addition to what has been said, I think on the risk management, who manage the risk for a crowdfunding platform? I gave an insight from the cooperative model. And for instance, we have members. There's this kind of, bylaw by the Ministry of Cooperatives. Once you save, you get double of what you have saved after 6 months. So at Alalvest, we inculcated this model and widened the scope, not only for the banked, for the unbanked, where we also set up agents. So there are requirements that we have put in place. So part of those requirements is that, okay, aside from the KYC and due diligence that must have been done, okay, even if you have met the requirement of the 6 months, for instance, what do you want to engage in? What business do you want to do? We also look at that. So if the platform cannot provide the funding based on all these requirements you have met, we work with our non-interest financial partners. And I'll give you a perspective. It is really dicey, for instance. We were engaged in a non-interest financial institution, and I was with the head of MSME a few weeks back were really trying, who takes a risk? Okay, if we have this client that needs funding that we don't have the capacity to provide that funding for the business. If you want to come in, how do we also benefit in terms of the risk? And they said, you are only going to be liable if you are taking responsibility. You say you want to also, earn from that. For instance, do our own due diligence, all the necessary documentation must have been done before we move the client to the non-interest, financial institution. And they are saying that it's really something that is very important. They have their requirement. We have implemented that requirement on the platform. So before they even reach to them, we forward it to them. We've done like 75% of the work. So that makes it, to be very, very clean. So those are part of the areas that needs to be looked into in terms of the due diligence, in terms of the KYC, in terms of even the business itself. What is it, is it viable? Is it Sharia compliant? Those are part of the requirements that needs to be looked at. And this is where risk, also come into play.
Thank you very much. As we are cutting on this session, just a final word in 20 seconds. 20 seconds. How do you think fintech and non-interest financial institutions can work together to make this work? Just in 20 seconds. Let me start with you.
All right. So, So there are various ways where fintechs and financial institutions need to synergize to make crowdfunding work, right? There are a lot of ways, but I'll try to be minimal with my response. So the key part is more of synergy in terms of data sharing, right? So there are a lot of the people that want to access the funds, through crowdfunding platforms would have used financial institutions in the past way more, like Ridwan said. You need history of data to be able to do things. This history that we are looking for, majority of the conventional platforms or banks have them, right? And we that are just springing up, there should be some synergy, like an open Islamic banking solution, right? Where we access data from the people that have history, and the people that are coming up can also feed back information that will help the two entities play well to eventually make this run. So that synergy between businesses is key. And there are a lot more other things, but I can just allow others to talk. So.
Yeah, I think I'll just focus more on the, the partnership model, leveraging, API partnership, API banking. Today, working with non-interest financial institutions, has given us several insights around several, challenges around the technology, innovation. As a startup, you are very agile, you want to do things quickly. Sometimes when you work into this non-interest financial institution across different segments and sectors, some of them are not ready. So, and you have the solution. So in terms of that Sharia compliance, they are also very, very sensitive. So my advice is, there are a lot of things they can learn from the conventional types in terms of how they've leveraged technology innovation. So how do we accelerate that drive, right? It's very, very important. And we believe we can also we have a lot of potentials in the non-interest space. We all know that, even the non-Muslims also know that. So leveraging technology innovation can really accelerate that financial inclusion. It's really, really very important. And I think that's where, we, stand at Al-Alvis. Thank you.
Okay, thank you. Thank you. Because of time, I think at this point, we have to bring it to a close. And we thank all the participants, all the panelists for these involved discussions. We have provoked debate, and discussion will continue from here. and we will continue to engage all the fintechs, both online and offline. I think this is the collaboration that we have been able to learn about today has given us the opportunity to deepen the financial system and to see how we can take this from here to the next level. Thank you very much, and we hope to have you some other time. Thank you.
Thank you very much. Stay back for a group photograph. Please, Dr. Bashir, Sis Haja Kekeriakun, please join them. Please, group photograph. If you'll stand up, thank you. As we no smiles. You know how I reach like that now. Smiles, thank you. All right. I'm sure Ibrahim Durosimi is warming up. He will be giving the product session for Lotus Capital. He is the e-channels lead at Lotus Capital. Warm welcome for my panelists as they return to their seats. Jazakumullah khair. Ibrahim Durosimi will now take the stage to take us through a product session for Lotus Capital. He's the e-channels lead at Lotus Capital. So we would have time to take more questions from the floor. I had a few more people asking to ask questions.
Okay, good afternoon, everyone. I'm Ibrahim Drosimi. Let me start by saying a very big thank you to our panelists. Most of them I probably grew up with in the industry. It was nice learning from you all. Unfortunately, my slide decided to tell me to freestyle. So let me just go with it. I'm presenting on our fintech initiatives and financial inclusion efforts as well. Specifically, for us at Lotus Capital, let me start by saying financial inclusion for us, first of all, means accessibility. So what it means is that we are putting in deliberate effort to ensure that we open up ourselves, open up our businesses, open up our systems, so that other fintechs can also connect with us. So that whatever you are building, you can then connect with us. That's first. Second is also products. We're also putting our products out there to ensure that we're able to capture different aspects of the markets. Again, we understand how complex the markets can be. There's those in the rural area, there are those in the urban area, in the semi-urban area. So what are we doing to ensure that we're able to capture all of these audiences? One second, let me assist my colleagues to sort this out. Okay, fantastic. All right, so next slide. Okay, so also empowering choices. Again, like I said earlier, financial inclusion should go beyond, this is what we have, and then we are literally shoving it down your throats. It should be a case of, these are the options we have, then you choose from the one that's applicable to your need at that particular point in time. Lastly is collaboration. We can't do it alone. We're Lotus Capital, we have our footprint, but Nigeria has over 200 million population. So we definitely need to work with other fintechs, other initiatives to come together, see what we can do to ensure that we're able to reach out to all of these markets. Next slide. Okay, so in summary, we have two key efforts that we're going to market with that are taking the lead for our financial inclusion effort. The first, Lotus Stripe, which is a digital-first halal investment hub for the new generation. I'll come to that in a bit. While the second is our Lotus API 2.0, which is designed to enable fintechs like yourself be able to come to us, and then let's see how we can plug into each other, and then you can then build your own halal investment hub off the back of our own fintech API, so our own Lotus API. So next slide. So let me start with Lotus Stripe. This is like my baby, sort of, technically. Think about it this way. So if you try to onboard your younger nephews and cousins, nieces, to an halal investments or a Sharia compliance investments products, it's a bit of a hard sell for them, right? Selling to them, because they are like, okay, so what's in it for me? They're trying to wrap their head around it. And then we understand it can be quite tricky to sell. So Lotus Tribe is designed specifically to, first of all, capture the attention of the younger generation. What do they find attractive? What works for them? First, it has to be digital first. So what that means is they don't want to fill your forms. They can be quite long and boring. They don't want to have to come to your office, sign some documents, do some things. So what we've done is, first of all, make that to be entirely digital first, and also personalized investments. Again, I'm not from that generation, but I wish I was. I can be it can be tricky with me. Like, I'm an individual, I have my own nuances, I have my own peculiarities. So what I want is an investment hub that speaks to me as Ibrahim, not me as part of a market. I don't want to be part of a market, I want to be me. So Lotus Tribe, first of all, profiles you, understands who you are. So I'm Ibrahim, I go cycling, I can be troublesome for people that I love. All of those things, I earn particular amounts of on a monthly basis. How do you then convert that to an investment hub that speaks to those needs for me? My preference would be to buy a private jet in 5 years' time. How do you capture that need in an investment hub for me? That's what Lotus Tribe does. And also financial literacy. So for some reason, I'm very educated, I think I am. But in my entire course of studying, I'm not sure anybody taught me investments. So Lotus Tribe allows you to be able to bridge that gap. So we understand that you're probably a scientist, you're a journalist, you're a doctor, but who's teaching you in investments, such that you understand clearly how your money is growing, how best to invest it. That's pretty much what Lotus Tribe is designed to do. And lastly, a community. Unfortunately, the age we live in right now is the age of collaboration in terms of our social needs. Everybody is literally on their phone, talking to someone, speaking with someone, and then that's the way we are right now. So what we have there also is a community that allows you belong to a group of fellow investors, and then you can share your struggles together. Yes, you might want to do weekly investment on Lotus Tribe or do daily or quarterly investment, but without a supportive community, that would just pretty much drop off. So all of this is what we are putting together to create a app that will allow us then capture this newer generation, which are the most financially excluded when it comes to investment and the likes. And then next slide, please. And then secondly is our API 2.0, which on behalf of myself and the entire team, we are super proud of. It's taken a bit of time to get to this stage. And it's 2.0 because, Lotus Capital is about 16 years, close to 2 decades. So it means we've been around for a bit. We've had version 0.0, version 1, and this is version 2. But specifically, this is designed to enable fintech innovation. Now, we've gotten requests from several fintechs who have the technology, who have the marketing strength, but maybe not necessarily the Islamic finance strength to build their own investment hub. Now, this is a chance for them to piggyback on that knowledge that we have. So now you can take your technology, bring it to us, and then you can plug it into what we have, and then you can then start to offer halal investment options on your own app. Sell to your clients, sell to your investors, sell to your customers, earn your commission or earn your own earnings, and then, of course, powered in the back end by Lotus Capital API. Part of the key features is, one, is designed from ground up to enable you to seamlessly integrate with us. So it's not a case of we have to go through 3 weeks, 4 weeks of signing paper, trying to figure out your own API endpoint and how we can connect with us. This makes the job a lot easier. So next slide. Do I have to have one more slide left? Yeah, so in conclusion, let me say that for us, financial inclusion is not just something we wanted to talk about. It's something we are actively promoting. With Lotus Tribe and the API 2.0, the intention is to start expanding to newer markets. First for the newer generation, and then first to other key players. So whether you are a Alves, Aziz, or you are a Ridwan, all of those apps that you have, now we can plug into each other and start to reach out to a newer audience. Thank you for your time, and thank you for coming out to listen, and yeah, thank you.
Thank you very much, Ibrahim. Thank you. So we're moving on to the Q&A, and what we'll do, I'll leave a mic at this table. They are the brain box behind all that we've done, the panelists, the organizers, so they will have the mic, and then I'll move around with the other mic. I already have someone sent in a request for a question, so Bros, it's your time now. Number one, you're writing away. Oga, hello, aye, well done. You're number one. Anybody else would? Number two, number three, number four, number five. Can you ask questions when you are in your dark room? People are brainstorming. You can ask yourself questions. Right. So I'm going to start with, I didn't give you a number before. So 3 people on this table, 1 on this table. Okay, let me start with number 1. But to make it easier, allow me. I know there are 3 on this table. There's 1 on this table, 1 there, and 1 here. So I'll start with this table, please. Yes. So I'll leave here. Just start with this and we'll just move. Thank you. So I'll leave the mic here. So anyone, just take notes, and whoever wants to answer the questions. Jazakumullah khair.
Hello, good afternoon. I think it's noon. Yeah, good afternoon. So my name is Fadila Ali from, I'm an investment analyst and a lawyer from Boston Advisory Limited and investment outlets. So my question is this. We're talking about the how fintech and its non-Islamic banking works, and how we use fintech to make the banking system easier for us. And I know in terms of assessing loans, or when we are assessing investments, what we usually do is that we look at the credit history of the investor, of the clients. So my question is, if you're saying non-interest banking is an ethical alternative to the conventional banking, how do I put this question? Excuse me, please. So how do you, and then one of the ways in assessing if the client is the right fit for your outfits, you look at the history, the credit history of that particular client. And we all know how difficult it is to assess loans from the conventional bank and pay back. And then you're looking at a client that has a bad credit history because he has accessed the conventional bank, and then he's coming to an Islamic bank to access credit. But yet you have to look at, I know one of the speakers was saying something like that, but yet you have to look at the credit history of that same client when he assessed loans from the conventional bank. So how do you merge? How does this correlate? Like, what do you do? Because I don't know if you understand what I'm trying to say. I hope you understand, because I'm getting confused here. But yeah, so I'm trying to understand how do you marry them exactly? Thank you.
All right, thank you, Farid. I will go to this table. Fadila, I apologize. So, excuse me, let them answer that. As they go. Yeah, okay. Because it was quite long. Okay, so.
Okay. I can answer it, and I can also pass it to any of the participants in that commission that the Lotus. Okay, let me try again. So you're correct. In trying to assess the credit quality of a particular counterparty, the credit history is important. Sometimes, if this person is a non-interest governed entity, they probably might not have credit history at all with a conventional bank, right? Alternatively, the person might have had relationships with a conventional bank that went bad, and you would have to consider that. So I'll start with the first instance. The person doesn't have any credit history. What you do is, you wouldn't be using credit history at that point. You'll be using transaction history. So the person will have used a conventional bank and have run transactions in that conventional bank. So you use other matrices. You look at the floats in the account. You look at other areas of credit. You look at the character of the person that is trying to raise the money. You look at the profitability of the business. If that is not sufficient, you will try and cover yourself in the transaction flow itself. So when you're disbursing money to the supplier, you'll make sure that you're in the domiciliation of the cash flows of that business so that you can take your money out. So you wouldn't be able to leverage on credit history, but you would have other elements that you can use in approving the credit. Now, in the second one where the person has bad credit history, honestly, if you're wise, you would take that as a hint not to do business with the company if he doesn't have a good reason why that happened. Because credit history is important. If somebody has provided accurate documentation prior and defaulted, not because of the transaction going bad, but because of bad character, it's unlikely that that person is going to just become a saint when he starts dealing with a non-interest bank, right? So you should take that as a red flag. Some people would price their transaction for that guy. So if that guy has bad credit history before, what you would do is you would increase the kind of return you want from that transaction in the event that he doesn't perform. But that is a high-risk taking entity. So those are two possibilities that we can have. I'll ask if anybody else wants to answer or if that is sufficient. Anybody?
Okay, so what I also want to add to that is that, for example, if you are dealing with transactional data, one of the things you can do is also to have a technology in place to extract those information. You know, so for example, I am applying for a credit. I've been using a bank for the past maybe 15 years, and you need maybe my 1 year transactional data. You know, getting that 1 year transactional data, and you want to analyze, and that's where technology comes in. You might have built an algorithm that will analyze the data. My rules is that this customer must not be spending more than 25% or 30% on their expenses, family expenses, for example. And that technology, using AI now, can extract those information and quickly give you a result at a glance. Because if you imagine you are processing, maybe 1,000 or 5,000 requests every 2 weeks, for example. You know, you can't do that manually. And that's where technology comes in to analyze those data for you. Thank you.
How do we manage situations where unscrupulous people decide to use crowdfunding?
So yeah, in the case of the letterback though, it can happen to anyone, right? According to the statement from the CEO, right? So they open an account for, you know, someone, and the person used that account for fraudulent activities. Now, in our own case, I heard one of the panelists earlier talked about, you know, not wanting to partner with a conventional bank, and, you know, that kind of delayed, you know, the time that would take for them to ship their product. In our own case, we partner with Providence Bank, right? Because we're not necessarily doing something that is non-Islamic. We're not, you know, providing haram products to our, you know, our investors, our merchants, as the case may be. So for the investors that we onboard, for example, we do proper KYC for them, just as a bank would do. So if we have partnered with Providence Bank, for example, and then Providence says, oh, these are our KYC requirements for every customer that opens an account with us. These are the same requirements that you have to use as a crowdfunding platform when you're onboarding your own members or your own investors. Because investors that open accounts on a crowdfunding platform that has layered on another bank's infrastructure, ultimately is also opening an account with that bank. So that member or that investor is an account holder of that bank. So the requirement that a bank would use in opening an account for anyone is the same requirement that a crowdfunding platform would use in opening an account for their investors. And that's what we do. Now, if the investor then goes ahead and does something really shady or carries out some fraudulent activities, we have responsibility or duties to report such transactions, just as Providus has a responsibility or duty to report suspicious transactions to the CBN. Obviously, Providus is going to flag, such. So, but of course, we have other policies in place in terms of how much you can put into, an investment at a certain point in time. But the laws and the rules that guide the bank that you layer on are the same laws and rules that guide the crowdfunding platform. And that's why it's important, the question she asked about SEC, it's important that crowdfunding platforms, as they are growing, right, they become more regulated so that, you don't expose your company to those kind of people.
Can you come closer and you just pass it? Please help us.
Thank you. Yeah, so I'm just trying to contribute to what Ibrahim Lukman has said in the first panel, where he said that we in the industry, we haven't really done so much. I personally believe that you do not compare apple to apple. You have, like what Sanrisa always says to us in the industry, you need to compare apple to apple, orange to orange. Oftentimes, we like to compare ourselves with Malaysia, Indonesia, all of that. These people has really gone far and wide before we even started. For example, I joined the industry in 2017, and between 2017 to 2023, we've had like 3 banks gotten licensed, we've gotten more of fintechs come up and all of that. So the industry is not slow, and according to Fitch report, they said we grow 10% year on year. So I think we need to always put data to what we say, especially when we are in gatherings here. And the last one he also mentioned was kids not, how we could try to influence to grow sustainability of the industry. If you ask me, is just 2 things: leadership, influence. We don't need to hire the likes of celebrities or all of that. For example, Lotus Capital has done a lot for me and others. Like I told people that Lotus was not a work experience, it was more like a school, like a business school for me, yeah. So leaders need to influence the younger generation, put the sustainability in them. And Lotus has also done infrastructural development in the non-interest finance ecosystem. Some people cannot define what Islamic finance is, but they know what Sukuk is. Why? Because of infrastructural influence. Thank you.
Thank you. My name is Rashida Amode. I'm the CEO of Helper. Helper is a crowdfunding platform for medical financing. That's not what I want to talk about. So basically, I just want to contribute to what members of the first panel talked about. And I think that non-interest financial institutions have a lot of work to do. They can't have branches in every single city in the country, and they want to, drive financial inclusion for the growth of the Islamic or non-interest financial space. So one thing that I think they can do is partner with cooperatives. These local cooperatives are closer to their members. They are in the marketplaces. They are in the local spaces they are in their communities. So instead of you trying to reach out to some of these people that would never download your app, there are a lot of rich merchants in Kano markets. They would not download your app, honestly. Some of them, they just want to meet with people that they know and can see and can relate with. And we need to have that understanding that these people actually have the money, they are in business, and you as the financial institutions, you need their funds, to grow. You need to invest their funds for them. They too basically want to expand and grow, but they're not the kind of people they're not like young people like us that will download an app, So they want this physical connection. So you can reach them through their local cooperatives, the cooperatives and this same thing also applies to Takaful companies. These market women would not come to you. Honestly, they are not corporates like big businesses that would come to your office. But you need to get to them through people that know them, that they see daily, that they can relate with. Maybe the market women leaders, something like that. They can actually help you sell your products to them. And when we do this, I think yes, everything is not only technology. There are some people that would not go that way.
Good afternoon. My name is Rahma Say Mohammed with ProShare Web TV. I am the anchor for Islamic Finance on Web TV. So I have a contribution and a question. My contribution is, I think when next something like this is holding, we should have like a workshop session where we group people, we brainstorm and, bring solutions to certain problems concerning this community, because it's a community. Okay, that's on the side. Then my question is, okay, from a broadcast retrospect, there is knowledge gap. Now, I'm not talking just based off on the people here, I'm talking based off the audience, the general public. We're trying to balance knowledge between the general public and the people in this room. So how do we all come together to balance this knowledge gap? How do we expand inclusion, financial inclusion in this non-interest finance? For example, I was having a discussion with my friend and I was telling her, I anchor an Islamic finance program. And she was like, isn't that the system that you not get profit and all of that? And I was like, okay, that's why I'm here. I'll enlighten you. So stuff like that. And then again, this was from a Muslim, by the way. So that's to tell you there is knowledge gap amidst the Muslims and non-Muslims. This other person I'm talking about, I met him in an event last week, and I told him about this Islamic finance. And he said, Islamic finance, I've never heard about that. And I asked him, do you know Taj Bank? Do you know Lotus Bank? Do you know Jaiz Bank? Well, that is what they practice. It's non-interest finance. So we need to find a way, or how do we do this aside the media, aside using social media platforms and all of that? How do we all come together to create more awareness amidst the general public?
Okay, go ahead. Okay, thank you. My name is Jafar Alabi. I'm co-founder and chief product officer at FagoPay. So quick one, great one. People talked about crowdfunding solutions. Somebody mentioned Kickstarter. By the way, we have a Muslim crowdfunding platform that's done very well, LaunchGood. LaunchGood has done over 400 million euros, thereabout, funding different projects, about 75,000 projects, thereabout. Just wanted to mention that. And back to my question, I actually like what, matter of fact, I saw you on Instagram or something like that. You're talking about, I think you were trying to raise some funds, some 2 years, you or Ridwan. It so much resonated with me because myself, alongside my brother, did something. I'm talking about business model before technology now. I mean, we needed to fund his business. He's the business guy. I'm corporate. So we need to fund his business. I don't have money. You understand? Fine. Let's bring people together who have this money. A lot of people have money they're saving for school fees next year. Money they're saving for something is just lying there. So let's bring these guys together on a WhatsApp group. entirely there. I say, okay, we're doing this, so we're going to need this amount, and we're going to share profit in this way. And we even made it low risk. You can buy a unit for as low as 10,000 naira, and you can get paid as short as weekly, monthly if you want it. And then we did that, did a couple of, some millions, running to 100 or thereabout over the years, not one time anyways. So the challenge that came, because then my products and business development mindset started coming into play. It solved the immediate problem of he's able to get business running and pay profit and all of that. But I was like, can we scale this? Can we get more people, probably more business, because we're now getting more money than he needed for his own business, right? And there's still these people available. We're ready to put in money in any time because, it's been profitable for them. So now why I had to bail out on that is that I cannot deal with having to, I can do that for him, because if he's going to run, I know where to go and pick him and say, guy. So, but then I cannot do the same for. So how are we working on, I don't know if anybody is doing, because that's what's in my head. If there is a solution I could plug in to now sort of help me verify or get people, then I can leverage that community that I already have, and they can put in that kind of, we can leverage our own model of short-term, low-risk, investment, but then I need where to put it so that I would not have to, lose my sleep. So, is there anything like that? I'd like to ask that question. The number next is cooperative. The cooperative model that the sister talked about is something, a very great way to acquire lots of users, right? There are companies already doing this. There is Quara in East Africa, Kenya. Quara does that. They sort of create the bank for these cooperatives, such that directly or indirectly, their customers, their own cooperative, members directly on board on their solution. There is one stack in India as well. So it is a model that we can also leverage, something that we're also trying at FagoPay. And so I feel non-interest finance institutions should really do that to increase adoption.
Yeah, assalamu alaikum warahmatullahi wabarakatuh. My name is Dr. Aisha Abdulkadir Zubair. I'm an Islamic law lecturer, and I also manage a consulting firm as Sub Consult. So basically, I have 3 observations, and there are going to be questions in it. I hope I will be able to quickly do that in a very short while. So somebody on the panel, one of the panelists mentioned something about the issue of branding of Islamic finance. I want to be clear on the fact that we are not trying to change who we are just to fit into the space we're trying to acquire. So Islamic finance is Islamic finance. I think ethical is a bit different, but Islamic finance is what it is, and we have to ensure that whatever we do, we stay within that limit and ensure that we actually put up that image of Islamic finance. It's us, we own it. Yes, we can get people to come in, Christians and all that, but Islamic finance is what it is, and we should always advocate for that. And I hope we're not trying to lose our identity in the process of trying to include so many other things in that process. So secondly, when I came in, I knew I wasn't going to see Sharia scholars, but I was expecting to see some of them, and also the academia. So when we do things like this, I hope we try to pull them in. Yeah, there are things we have to take to them because they are Sharia scholars. Of course, we revere them in high esteem, but I also hope that we'll bring them in so that they will be part of these discussions. And it's not only when we now have products, we take to them and they don't understand it, and then we start saying, no, the Sharia scholars are bringing us back and all that. So let's try to always bring them. And for academia, we'll talk about financial inclusion. I'm a lecturer, so when I'm in class, I can see the gap. There's a huge gap between what is in practice and what we do in class. So it's only some of our own generation, our own upcoming scholars that will try to tell the student that, okay, this is what you are going to meet when you get to the industry. But basically, the theory aspect that we do in class is totally different from what is happening here. So it's important that we come and bring our students, bring the academia. You can invite some of the lecturers, even the NUC accreditation team and some of this. If they are part of this, they will understand that some of this curriculum has to be changed, and then we can do that. Then finally, my sister here already asked the question about regulation. So I'm a lawyer, and anything, when I get to a space, I also look at the legal framework. Do we have a legal framework that actually deals with Islamic finance in totality. Yeah, we have the Takaful, we have Sukuk, we have money market. We are coming up with FinTech now. We should start driving for an all-inclusive act. In Malaysia now, they have Islamic Financial Services Act that deals with everything. Nigeria, we are no longer in the infant stage like we used to say. Islamic finance has been here for a very long time. So we should start driving for that all-inclusive act. We have lots of Muslims in the National Assembly. We can drive a bill that would actually scale through. Thank you. And I also like to commend the organizers for a very wonderful job.
Esther Mansour Ebola, Integrated Water Links. I will start from Dr. Bashir mentioned something. And in late 80s, when NDIC was incorporated, one of their targets was to inculcate savings habits. However, today, government policies have been giving us a lot of problems. You are the one that is trying to incorporate saving habits. You are still the one that is bringing up policies that discourage people to take their money to bank. I want to refer to the Ibrahim Lukman made mention of misconception. I want to look at misconception in another way, and that is because it affects professionals. Non-interest banking. People still say that there is no difference between Islamic banking and conventional banking. They just tell you the difference is that they are calling it cost of capital and they are saying loan, no interest. I said no. So when the accountants, Muslims that are auditors, accountants, they don't understand the concept of interest and non-interest. The way because I have an opportunity to relate with Lotus Capital, and of course we access a credit facility. The way it is run is different. I think there should be a way to bring the professionals together. Try to link with ICANN and other professional bodies, the CIBN, and let them know what is really the operational models of non-interest banking. This is the only way we can fly. So for me, I took my time to dig in, and that is why I'm able to know. And of course, I was involved. I have a professional colleague that was telling me his clients also access with Lotus, but he was not satisfied. And I just laugh off. So please, let us do more work. The professionals are important because they are the one to sell us more. They are the one to recommend to their clients. So if they are recommending conventional banks over the non-interest bank, what do you think will happen? Assalamu alaikum.
Wa alaikum salam wa barakatuh. Do I have any feedback? So, both of you, and once you're done, Ridwan and Ibrahim, please hand over the mic to Hajia Kekere as she gives a closing remark so that we can have brunch, because it's no longer breakfast now. It's gone into lunch. Thank you so much. Ridwan, then Ibrahim, and of course, Hajia.
Yeah, so sorry, I do have a meeting, so that's why I just want to jump in. Sorry about that. So just to answer one question about branding, and then I also want to give like a comment. I think Islamic finance already has a challenge, not necessarily from Islamic finance, but the way Muslims see or people see Islam in Nigeria, right? I've had the opportunity to live outside the country, and I was speaking to some investors in Silicon Valley and Toronto. And deliberately in the pitch deck, I was using words that didn't really connote Islamic finance. But they understood because these are very sophisticated investors. And what he told me was, just put Islamic finance in your pitch deck. Tell us you're selling these products to Muslims. I said, no, that's not what we're trying to do. We're selling to everyone. I said, but your target market are Muslims. That's what they understand. And I was trying to explain to them that when we bring this kind of pitch deck or connotations to Nigeria especially, there's always that, sensitivity. even for Muslims, when you see Islamic finance, right, they have a problem trying to understand what it is exactly. In the UK, they don't have a problem calling Islamic finance Islamic finance. In Canada, they don't have a problem calling Islamic finance. They would even label it, this is a product for Muslims, right? So I don't think we have a problem changing it from Islamic finance to non-interest, to ethical, as long as what you're doing is in line with the Sharia standards, is in line with the Sharia laws. Because someone can call something halal and it will be doing haram. And someone can call something haram and it will be doing halal. So whatever you label your product with doesn't really matter. The essence is what matters. That's my response. Then my comment is, there was a question that Mr. Masood was asking about how non-interest fintechs and the non-interest financial institutions can work together. I think one of the ways that we can work together is through funding. And when I say funding, I don't mean short-term funding. And that call, Mrs. Kekere, Dr. Bashir, we need you to start setting up venture capital funds for non-interest financial technologies, non-interest fintechs. Zenith Bank, Guarantee Trust Bank have participated in the seed funding for some fintechs in Nigeria. The only way we can grow Islamic fintechs in Nigeria and in Africa is through people like yourselves who have access to billions of naira and millions of dollars. So please, set up VC funds for us, because you understand the market better than those people and you have the funds.
Yeah, thank you so much, bro. Yeah, I understand that. I think I don't want us to misunderstand each other. So the lady, the sister from Bank. So what I mean is, honestly speaking, Malaysia is like, for me, because they've gone really far, like a benchmark. So that's the reality. And we've seen what they've done, and they've done it successfully. So in fact, part of the committee for CBN, the CBN had to bring one of their scholars down there to be a part of this, so that they can bring more experience and ideas for us. So the second part I wanted to say, my brother has actually helped me with that. So what I mean by branding it is that in the way we talk to people, right, is because of the challenges we've seen, right? That was why I mentioned it as part of the challenges that might really occur for people who does not understand the concept of Sharia banking or Sharia financing. So it might be a little bit of difficulty for them. Thank you.
Oh, okay.
Good afternoon, everyone. Assalamu alaikum wa rahmatullahi wa barakatuh. Can I ask us all to first clap for ourselves for staying till the end and being patient with us? That's not loud enough. Oh. Thank you. Then, can we also clap for all our panelists that graced us with their presence today? Thank you. And then, last of all, can we clap for our lovely moderator for today? Thank you. All right, so thank you, everyone. On behalf of TrustArthur and Lotus Capital, I'd like to thank you all for gracing us with your presence today, for the panelists for enlightening us on so many topics on financial inclusion, fintech, and crowdfunding, so many things. I also thank you for your contributions and your comments on doing more of this, more collaboration, and definitely doing more enlightenment on Islamic finance, or non-interest finance, as we like to call it. So I thank you all, and lunch is served. That's all.
Thank you very much. Before I drop the mic, I would like to implore everyone here to remind, especially those of you online, you can't interact with the panelists or the organizers, but at least you can go to their Instagram handle, Lotus Capital Limited, Lotus Capital Ltd. Send a DM. They are waiting in the DM to respond to you. And of course, TrustArthur Group. TrustArthur is also waiting to respond to your questions. Book sessions with them, walk into their offices and engage with them. Let's take this beyond talking points. Let's not make it a talk show. Let's actually see action, so that next time we're gathering for another breakfast or lunch session, we will then have achieved a lot. Thank you for working with us up till now. It's time for lunch. I would have this table go for lunch first. It's a table by table. So please, table 1, although it's not labeled, please go for lunch, and then we'll take the next table and in that order, so it's not crowded. Jazakumullah khairan.